All right. Hello, everybody. Welcome back to another episode of the Market Close. Let me know if the audio is okay. If not, I will change it here. We got a lot to talk about. We got a lot to go through. It is one of the ugliest days, rather, I should say, ugliest reversals that we've seen in the global capital equity markets. In the past year, S&P 500 is down 1.39%. In the morning, we were up 2% on the S&P 500. So you're talking about almost a 3.5% intraday reversal. And I mean, it's ugly. It is very, very ugly. I'll have Chris joining in about 20 minutes. He'll give his thoughts on what's going on in the macro. You have a lot of theories going around from a variety of different people on why we are getting this much pain. But Tesla losing 400, down 1%. Nvidia, after one of the best earnings in history, down 3%. Robinhood, $5 away from losing 100, down 10%. Palantir, lost 160, lost 155, 154.61. That's down 6.5%. Cypher, which was up 18% this morning, is down 2%. Rocket Lab loses 40. I haven't looked at Rocket Lab in a little bit. Just lost 40. That's down 10%. Oklo down 13%. Bitmine, absolutely disgusting day for Ethereum and crypto. That's down 10%. Nebius down 10%. Google even down 2%. Big Bear AI down 4%. Broadcom down 2.5%. Microsoft now in the 470s, down 2. Meta at 580. Amazon at 217. Mercado Libre very close to those Liberation Day lows from April. Bitcoin 86,000. I mean, it's just an ugly day. It is just an ugly day. I have some theories on why I think it is this ugly. At the end of the day, none of these theories necessarily have to make sense. I think the velocity and magnitude of the rug pull, if that's even what you want to call it, from the highs this morning, it's quite incredible. I don't think, we've witnessed the choppiness. We've witnessed the selling. We've witnessed up 1%, then down 0.5%. We have not witnessed up 2% after a bombastic quarter by NVIDIA, which, essentially controlled the entire market. And then almost systematically a complete reversal, and any little bounce you had on that reversal, which there were a couple, obviously did not hold through. And, you got extreme fear and greed. It's a couple points away from going back down to those April lows. It really does feel like there should be a bottom that is forming too. But then again, that's usually when the bottoms fall out. And obviously this morning, throughout the entire day, we've seen this bottom fall out. And you've got a lot of different narratives going back and forth, making people really question what happened today. Which begs the question, what actually happened? I have some theories, but let's hear from Tom Lee. Here's his perspective on what's going on in the crypto markets and how that's affecting the equity markets today.
Well, I think I'm going to kind of add to what Steve said. I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading. And if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the...
Essentially, Tom Lee is blaming a software glitch inside of a market maker for why we're seeing the exceptional levels of crypto deleveraging, which is his thesis for why the equity markets are also being hit as well.
The market makers and they got hit. Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Brian, it is. For instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto.
So that is Mr. Tom Lee's analysis right here on why the equity markets are getting hit. They're getting a painful residual impact from the crypto markets, and the crypto markets are getting hit because of a glitch. Now, I am not as educated on Mr. Tom Lee. S&P lows of the day right here, 652.94, on if a glitch is enough to explain the pain that we've seen. I think there's a lot of other people that will say it has nothing to do with the glitch. It just has to do with the fact that crypto is topped. But that's his argument. And he's using a historical argument from 1987 where that he's not wrong about around how there have been other certain glitches that have existed. If he is correct that it's just the glitch and that's it, theoretically, we would imagine there would be a bottom soon and that deleveraging would be done and then things would kind of move forward. And maybe that is what happens. But I'm not sure if a lot of people actually think that that is the reason for what's going on right here. And so as a result, you're seeing some pain. He goes on further in that interview to say that one of the reasons that MicroStrategy, for example, is getting hit as bad, and he wants people to, watch MicroStrategy very well, is that once this glitch has occurred and you have all these market makers that now need to hedge their positions, because they just got out of leverage, they can't kind of use leverage to go short Bitcoin or short Ethereum again through these perpetual futures contracts. So they're looking to liquid options markets. One of the most liquid option markets in the world is MicroStrategy. And what is MicroStrategy correlated with? Bitcoin. So the reason MSTR has been, and probably Bitmine, I mean, he didn't mention Bitmine, but I would imagine you have tons of market makers saying, hey, let's just go short BMNR as a way to get some hedge exposure to the downside of Ethereum. That also could be taking place, which is why Bitmine and MicroStrategy are getting hit as bad as they are. So, I mean, let me know in the chat if you think that evidence or that explanation is enough evidence to be a argument for why the equity markets are getting hit. But quite frankly, I mean, if you don't want to believe the glitch explanation, which is fine, what other explanation is there? And we'll go through some different theories. I talked about some theories this morning, but take a look at this chart right here. NVIDIA gains 450 billion in the first 12 hours since their earnings, and then they lose 450 billion in the next 12 hours. I mean, this is just like, I have never seen something like this before. I mean, this is absolutely insanity. And the craziness of how this move has taken place makes you believe, well, maybe there is something going on that is more algorithmic, more programmatic. And maybe that, maybe that's Japanese yen carry trade, maybe that's deleveraging, maybe that's systemic selling, maybe it is a glitch, but it doesn't feel rational that after NVIDIA gave those earnings, everyone was like, yep, let's buy NVIDIA. NVIDIA's the moon, or it's going to the moon. It's probably the moon as well. There's no issue with this AI bubble, yada, yada. And then 12 hours later, everyone's like, no, we think NVIDIA is a scam. The earnings aren't good. They didn't really deliver. And we're going to sell off the most important company in the S&P 500, NVIDIA, now down 3% on the day. And yes, there have been a lot of theories today about circular financing and people looking at their accounting and all that stuff. And I think those are valid concerns to have, and those are reasonable concerns. It's just, do we really think $450 billion in market cap decided that, oh, the accounting for NVIDIA seems off, given the accounting for NVIDIA has been the same accounting for the past 10 quarters. So like maybe there's some minute differences people are finding, but not enough to the point where you would have that entire reversal of a market cap move, which then affects every other stock in the market. Feels more like a yen carry trade to me. I mean, we'll talk about a variety of different theories, but it feels more like something that is happening in the macro. Obviously, I know people are probably getting tired of me saying this, but the rate cut disaster that we are in right now, this is a heat map, by the way. Walmart has been kind of the only green that we've had today. Is Walmart actually up 6%? Is that true? Walmart? Yeah, Walmart. Wow, 6.5%. Unbelievable. Walmart is your hedge today. You had two Fed presidents come out this morning and basically say, we don't need a cut. And then you had Goolsbee, by the way, who doesn't have a vote on the next meeting, but Goolsbee is one of the more important members of the Fed. He came out an hour ago and says the 2% inflation target is sacred. It's like, we made a promise to keep inflation at 2%, so we can't violate that promise. I was like, well, I think people might want to, pay a little bit more for their groceries, but keep their job to at least have enough money to pay for the groceries, even if they have to pay 3% inflation versus 2%. I mean, it is quite incredible, but every single Fed talk that we got this morning was rooted in this idea that we're not getting a rate cut. And as a result, I think that's why the Fed is, or that's why the market is reacting the way that the market's reacting. So I wish I had better reasons. We'll try to explore throughout the show some other stuff that's going on. But at its core, if I had to give one reason for you guys, I think it would be the lack of a rate cut and then something systemic happening from a market maker perspective, from a option expirer's perspective. You have a lot of options expiring tomorrow. Or from this programmatic glitch that Tom Lee is talking about, that could be the reason, but it feels more rooted in a combination of macro, whether that's yen carry trade, programmatic glitches, and then obviously the rate cut scenario that seems like it's playing out for December, which would entail not getting a rate cut. Netflix 105, Bitcoin touched 85 for a second, very close to 85 again. CoreWeave below 70, 150 to 69. The Q's down 2.5%. AMD $5 away from losing 200. SoFi below 25. I mean, at some point you just sit back and you're like, all right, I guess if that's what the market wants to do, then that's what the market is going to do. Thursday, November 20th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. There are two companies that have to report today. I mean, you talk about bad days to report, but these two companies have to report. Webull, which somehow was up today. I guess the market was enough to say that, or gave Webull enough pain that they decided to keep it up. Webull moving a little bit after hours, and then you have Intuit That's also reporting today. We'll get their earnings in just a second. We'll see what they have to report. Intuit right there, down about 0.5% after hours. It was down about 2% on the day. And then you got Webull. We'll get those numbers and then we'll see what's going on. S&P 500, 652, ended 1.53% on the day. Ondas was down 16%. D-Wave, quantum stocks actually absolutely got destroyed, 12.5%. Carnival Cruise down 3%. American Airlines down 0.5%. United down 1.4%. AppLovin, this thing was 750 a couple weeks ago, 520, down 1.74%. Rigetti from 50 to 22, that's down 10.4. IONQ down 14% on the day. Everything high beta really got flushed out today. Oklo down another 14%. Obviously very ugly. Webull getting a little bit of a move after hours, and then Nvidia again down 3.5%. Triple V, thank you for being here. Thank you for the $200 super chat. I was talking to Triple V this morning as well. Obviously, he is feeling some of the pain from these companies as they're going down. And you know, the one thing he did say to me, which is, and I'm curious, this leads me to my question in the chat. I mean, let me know if you bought or sold anything today. The one thing he did say is that his younger self would have panic sold a lot of these stocks. The reason he didn't really sell anything today is because he thinks a lot of the selling is fake. And a lot of it is not a emblematic form of people running away from this market because they think we've topped, but rather something deeper that's causing this type of panic selling. So let me know if you sold, you took profits, you bought stuff. I would love to see what people kind of did today to manage the portfolio. But nonetheless, you did have someone like Triple V saying that he was holding long and strong, as he didn't think the selling was as justified as it was. Walmart right there, that's up 6.5%. Webull getting a 4% move. Let me see if I can pull up these numbers in a second for Webull. That one is moving after hours. Street wanted 3 cents. They came in at 7 cents. That is a beat by 133%. That's a pretty big beat on EPS. Revenue 137 versus 156. That's a beat by 14%. EPS is up 275% year over year. Revenue is up 55% year over year on Webull. It's a good beat. It's a good beat. Triple digit beat on the top or on the bottom line. Double digit on the top line. That's not something that a Webull shareholder should be too upset about. Obviously, the stock has been getting hit over the past couple of weeks, up 2.9%. The fact that it's even green after hours on a day like this, I think is pretty impressive. So you do have a 133% beat on EPS and a 14% beat on revenue. Intuit is also out 334 on Intuit. They beat on the top and the bottom as well. Beat by 8% on EPS, beat by 3% on revenue, 3.885 billion versus 3.76 billion. EPS is up 34% year over year. Revenue is up 18% year over year. So you got two decent earnings from a Intuit and a Webull. Webull now up 5.2%. Intuit, which was down on the day, is up 0.5%. It's up 0.5%. And that's what you got. That is what you got as we're seeing some of the pain. Walmart somehow held 6.5. I mean, I know they increased guidance, but still on a bloodbath day like this, the fact that people ran to Walmart as safety is quite incredible, especially if you put the narrative together that the labor market would mean that consumers would get challenged. Now, obviously, they would go to Walmart over other stores, but still, you would imagine Walmart gets hit in a consumer-based recession, but the street loaded up on Walmart, which again makes this day so wonky. Like you just had a lot of different weird things happening back and forth after an hour of blistering green. And then you had a full reversal. NVIDIA right here, still red after hours. The S&P 500 also red after hours at 652.56. PayPal, which I think a lot of people thought bottomed at around 63.58, down 3.3%. Grab lost $5 at 498. I mean, pretty much every single stock that has any level of beta towards it, or even if it doesn't have beta towards it, if it's not seen as a defensive, I mean, it got wrapped up in the algos and they took it down. Duolingo down another 3.7%. You would think 190, 185 was the bottom. Nope, another 3% down. Verizon even was down 1% on the day, which doesn't have much beta at all attached to it. Goldman Sachs was down 1.56%. UNH actually ends at a little bit of green, so there was some safety there. And then Palo Alto down 7.4% on the day. Ross also had earnings. Let me pull them up. Ross Stores, they are up 3.55%. Another company in the consumer space. Ross beat by 12% on EPS, 158 versus 141. Beat by revenue on 4%, 5.6 versus 5.4 billion. Revenue is up 10% year over year. EPS is up 7% year over year for Ross. So those were some of the earnings that we had. Ross, Webull and Intuit, not the most important companies in the world, but nonetheless, those companies did have some relatively okay earnings as we get into the market close. Fed's Goolsbee says it's okay to disagree with other Fed leaders if he feels strongly, and he believes one more rate cut in 2025 after September cut is enough. Again, there's like Waller, and that's it on the Fed board that is actually saying we need to cut. I mean, we all watched, if you were with me on the market open, if you didn't, you can go back to it on the morning show. I mean, we listened to the Fed president Hammock from Cleveland explain to us why she doesn't want to cut rates. And the explanation was laughable. I'm sorry. It was just laughable. I mean, you're listening to someone talk about how they're so excited for their conference where they're going to have a Wharton School professor speak to everybody about monetary policy and then not answering very specific questions about inflation versus the labor market. And it just, I don't know, dude, it really made you think that these guys are not going to cut rates. JP Morgan, by the way, took away their rate cut forecast for December. They still believe the S&P 500 can have a good end of year, but they said that we don't think the Fed's going to cut rates based on the jobs data we got this morning. And as a result, the Fed probabilities, which although they were lower yesterday at 27%, they're now at 39.6%. They're down from 42% in the morning. So once again, below this 50% level. And obviously that's why we're seeing that is one of the reasons potentially we could be seeing a lot of pain in the equity markets. Let's get a little bit of coverage on the tech sell-off and crypto, and then we'll have Chris join the show and get his thoughts on what's going on as well.
Today and closed down roughly $100 billion. For context, that $330 billion swing today, roughly the market cap of Home Depot, and closing down by around 3% on the day. The hyperscalers, which initially started the day higher, also reversing gains likely tied to concerns around CapEx and whether these companies still need to shell out more to buy AI chips from NVIDIA. Vertiv, Eaton, and the industrials that are involved in the cooling, the electrical equipment used inside data centers, whipsawed as well. Melius Research Jake Levinson telling me the move is really tied to valuations. He says there is more room to fall from here, though reiterates that the fundamental story remains strong. All these companies continue to see big positive order surprises from the data center suppliers. Those broader concerns, by the way, around how to value some of the high flyers, that hit Palantir. It was down another 6% in today's trade. Even companies like Palo Alto Networks that delivered a strong quarterly beat on earnings and news of an acquisition that the street widely sees as positive fell by over 7%.
And that's also why this feels more systemic. Palo Alto is not trading at some aggressive multiple. So Palo Alto having a good earnings, decent acquisition, the fact that Uber, why was Uber down 7%? Like, is there a bubble in Uber? And you just look across the board and you see everything getting hit. It really is reminiscent of Liberation Day. But in that case, we had a clear reason, which everyone could point to, which were the tariffs. Today, no one fully has a reason that is defined, and no one knows when that reason could reverse with a Trump tweet that changes the decision on tariffs.
So Piper Sandler raising its price target on the stock to $230 a share, maintaining its outperform rating. Morgan?
All right, Seema Modi, thank you. The crypto market, the first is loot makers, the ones who usually keep trading going smoothly. And without that support, even small sell orders can move markets. Now, we've been in a slow unwind ever since. Bitcoin is now down more than 30% from its recent all-time high, and the fallout is hitting crypto-adjacent names the hardest, including exchanges like Coinbase and Robinhood. But one name that is taking the brunt of that pressure is Strategy, the most liquid public proxy for Bitcoin. It is down 40% in the past month. When hedge funds can't hedge their Bitcoin exposure directly because derivatives markets are too thin or contracts too large, they short names like Strategy instead. It has become the release valve for hedging pressure across the industry. John?
All right, Mac, thanks. There is.
All right, let's get some other perspectives onto the show and see what some people are thinking. Ladies and gentlemen, Mr. Chris Patel.
I never should have got into crypto, bro. Never. You go back to the finance junkies days where I used to make fun of Carlos and Vitaly, be like, F you crypto geeks. And then I was like, I got into crypto because I'm like, oh, stable coins. I bought into the Tom Lee era. Of course, they're super useful, dude. Everyone's talking about them. Duh. Ethereum, that's where all the money should go. And bro, Tom Lee, he's Asian. Asian people know how to do crypto. I can't be wrong about that.
You know, it's funny. There's the viral video of another Asian guy who went short 1.5. Have you seen this? Oh, he went short 1.5 million worth of ETH like a month ago, and he posted it, and it's been going viral today because he's probably made a lot more than 1.5 million. But yeah, man, it's ugly. It's very ugly. I mean, let's get started with crypto. Just in general, what are you thinking about this? Do you think we've topped in crypto? Do you think there's a systemic glitch like Tom Lee is saying? And how are you dealing with this?
I mean, by the way, it was just a joke, all right? I don't necessarily care that that like, you know, like crypto is going down. I mean, when you sign up, when you get into crypto, it's an asset class that has a lot of breadth, but it also has a lot of volatility. So whenever you have these volatile assets, you just have to remember that, hey, this is what you're signing up for, right? So risk mitigation is supposed to be on every investor's mind, especially when it comes to crypto, because the underlying fundamentals of crypto are basically built on what the next person is willing to pay for the most part. Yes, there are some utilities out there, like with Ethereum specifically, that do provide value, but you know, the market's not necessarily agnostic to the fact that it could be dumped on wholesale. So I think we have to kind of start off at October 10th, right? Once you get an understanding of what happened on October 10th, you can kind of see how a lot of this stuff makes somewhat sense what we're going through right now. So, you know, I'm not sure. I mean, do you want me to explain what happened October 10th real quick?
Got it. Go for it.
So October 10th was one of the largest liquidation events for crypto ever. Okay, I think it's actually the biggest crypto liquidation event. So basically, what happened was everyone was talking about crypto, including myself, you, all the YouTubers, whatever, and even among the crypto bulls, there's just this euphoria around stablecoin. Same thing with legislation around making crypto like a legitimate class that people should allocate capital towards. So a lot of people, what they did is, especially this on the speculative side, they rushed in and they bought a lot of Ethereum, a lot of Bitcoin, and they did it with a lot of leverage. So when you apply
especially with these perpetual futures contracts, which allows them to go up to 250x leverage.
Yeah, so a lot of people went in with a lot of leverage thinking that, you know what, like, yeah, the things can move, but it's not going to move like crazy amount in one day, which is completely wrong. October 10th, we get that infamous tweet from Donald Trump saying, we're going to send China, we're going to tariff China 100%. And when he did that, it sort of triggered markets to go down. Now, here's the thing. There's usually a lot of people that can kind of step in and buy up that liquidity. But that day, because of that massive dip, a lot of people got margin called. And the way that the brokers, they kind of protect themselves is that when you go, when you hit your limits, they start automatically selling. The problem is if they all start selling at the same exact time, it causes like this giant flood of people going throughout the exit door, right? Now, if that was the only thing, we could chalk it up to, hey, you know what, whatever, this like a one-time flush out of leverage, it's okay, things happen. The problem is once you do that, you're basically taking away this giant pool of liquidity from that specific asset class. And to get confidence back, it takes time. It's not one of those things where it's just going to happen automatically, where people are just going to say, you know what, I just lost a whole bunch of money doing leveraged crypto plays. I'm going to get back in now. Like, no, like a lot of these people, they have to get back in, but they'll get back in slowly after they start believing in the underlying asset again. So the key here is time will eventually fix this, because the reason to be bullish, especially on Ethereum, is that there actually are some use case catalysts that are coming up in the next few weeks. I'm not necessarily 100% if the market is going to recognize it to the degree that Tom Lee is saying, where Ethereum is going to go to like 7,500, because I think a lot of times companies and asset classes, they don't just run on fundamentals. They also run on sentiment. And sentiment right now is really bad for crypto. So, you're seeing this extended sell-off in crypto. Some people, of course, saying that this is a start to crypto winter, that 4-year cycle. So
do you think that's the case? There's a chance.
I'm in the Tom Lee camp when it comes to that, where I don't think that's the case, because I do think the institutions are a lot more present in the market now, right? So I'm not necessarily like 100% in agreement with, okay, now we're at the top and the end of a cycle. I'm not sure I agree with that whole cycle debate. Yeah, so that's the short term thing. And today, when we look at the market, I think there's some cross asset like bleed over of people saying, you know what, I need to get my risk what is that thing called, risk down. So that's why you're seeing a lot of high beta getting sold off, and you're seeing low beta. It's not getting sold off, but you're not seeing it like go down nearly as much. So there is a rotation. Like I think the healthcare stocks were actually up today. Health insurance, no, they were down too.
UNH had a little bit
up slightly.
Yeah. Okay, so that's the perspective on crypto, which I think is fair. Let's transition to the equity markets and kind of how you're thinking of it. Nvidia, best quarter ever. Everything's green, including crypto. And then at around 11 a.m., it all dumps. I mean, you've been around markets longer than me. You lived through 2008. Your dad lived through the dot-com bubble. You kind of saw how that played out. What do you think your gut reaction is that happened? And do you think there's a lot more to the sell-off that we saw today?
I think people have to, take a step back sometimes and just say to themselves, like, what is the market sentiment, right? Like, what is the market saying? Not necessarily like, what are the numbers saying? Because the numbers could be saying one thing and the market sentiment says another thing. So I think Nvidia, even though when they came out with these numbers, the initial reaction was, holy crap, like there's tons of AI demand. We're literally like on the cusp of a revolution. There still is a lot of fear out there when it comes to this sector, and seeing some of the financing deals that, the hyperscalers are doing in order to support this build out, and the Nvidia's revenue is tied towards a lot of that buying. So people are getting nervous, and people, because they've lived through multiple bubbles like this, they've called it a bubble, and the thing is, when consensus becomes the norm, then people are going to re-rate the stocks. Now, here's the thing. If you still believe fundamentally that there's still a lot more room to go with crypto, then, not crypto, sorry, with the AI wave, then by all means, like right now is a great time to pick stuff up. But if you feel like, hey, you know what, I think that we're at a near-term peak, maybe you want to avoid it. But the point is, I think this sell-off in AI is both good and bad to a certain degree. There's a lot of people, and I kept asking Sam this. I said to Sam, why do you want to invest in these AI companies? And he's like, well, they're great companies. They're doing X, Y, and Z with AI. And I'm like, you're not afraid that at some point all that demand is just going to dry up and growth rate's going to come down and blah, blah. He's like, yeah, but I'll deal with that when it comes. And I'm like, interesting. The reason why I say that is because the market tends to always catch a lot of people off guard, right? Where you think that you have enough time to get to the exit door before the market closes it right before you. Like, you could literally be the second to last person about to get out the door, and it'll close the door on you. So a lot of people, especially maybe on the institutional side, because they're playing with billions and billions of dollars, they're not waiting around to sell at the absolute peak. So I think what we saw today, and this is something that I saw in the reports, which was there was a lot of liquidity in these names, with a lot of people FOMOing into Nvidia this morning. So volume was absolutely insane. So while retail and a lot of FOMO, like people who are FOMOing into to Nvidia, a lot of institutions were selling out. I don't know if you saw that by any chance.
I saw that. Yeah.
So that's why you saw this absolute giant reversal in Nvidia. So when you have these moments of high levels of liquidity, bro, it's, they're like, whoa, this is my time. This is like a great place to exit. Not to mention, it's the same thing with profit taking. I think a lot of times people are, if you've done really well on the position and you kind of want to lock in some of those gains, like what better day to lock in a profit right before you think that it's going to come down. So I think there still is room to run for the AI trade. But I will say this, the level of fear that's out there with regards to future growth prospects for companies like Nvidia that are heavily tied towards the story, I think it's gonna be they're gonna have to basically climb a wall of worry.
Yeah.
You know?
Yeah. Well, and I think that's what kind of blindsided people today, because like everyone knew that the bubble fears are getting intense. And if Nvidia even kind of missed earnings, meaning they beat earnings, but they didn't really beat earnings in a high margin, then we would tank. But they did what they needed to do. And so that's why everyone felt pretty happy, right? Portfolios were up no matter what asset you were in. Nvidia kind of pumped the entire market, which is why it's like, if there's more room to run on the AI trade, there's more room to run for the market, because the AI trade has become the market. If there's not more room for the AI trade, then we're topping out of the market, right? Because at the end of the day, you can't have these AI companies, CapEx companies, Nvidia be 40% of the S&P 500 and imagine the market can meaningfully make a gain next year, or like any sizable gain that's worth investing in, if those companies don't participate in. So I guess here's another question. Do you think the earnings from last night justify this type of sell-off, or do you think there was something else to the sell-off besides the profit taking? Like, are you thinking yen carry trade, rate cuts? Is there anything else in the macro that you think is leading to the sell-off?
I mean, from a macro side, I think that there has definitely been a giant re-rating of the level of rate cuts that we were thinking that we were going to get versus what we're actually going to get. I mean, sentiment's been flipping since Powell came out, I think the last meeting, and said, look, I think basically Powell kind of screwed us a little bit in saying, hey, listen, guys, December, there's no guarantee that December is going to have a rate cut. And then all of us, and then now we're also dealing with this blackout period where we don't have any data. So the Fed is just being cautious and saying, look, in the absence of legitimate data that can prove out the need for another cut, it's better that we just kind of wait it out. And so a lot of what the other Fed speakers have been coming out and saying, they've all been saying the same exact thing. Now, one of the things, if you go back and you listen to some of Powell's commentary around how important Fed messaging is, he said he's been very clear in that he doesn't like to surprise the markets on the day of FOMC. So instead of like, hey, listen, guys, we're going to cut, we're not going to cut, it usually is like it's like a leaking pot of information that just keeps coming out, and it comes out through these various interviews with all these other Fed officials that basically doesn't create a situation where on the day of the Fed meeting that the market just gyrates like crazy, because like what the market was expecting, what they're not expecting. So that level of uncertainty ends up going away. So I think what we're seeing is this notion that we're just gonna, like I said, I think at this point the odds are more in favor of no cuts, and we're actually going to get a pause. But to me, when I look at this, I'm just like, yeah, well, that just means that they kind of pushed it to January, because a lot of the fundamental data that I'm seeing that's been coming out from the private side is showing a deteriorating labor market. You've seen all these private companies already announce that they're going to be doing layoffs, X, Y, and Z. So I would hope that the Fed isn't as dogmatic as they are, where they have to have data from BLS, where they can't necessarily look at other sources of data.
Why do you think the Fed and these Fed officials are being so aggressive on the idea of the inflation versus labor? Like, do you actually think they feel inflation is like a 2022 concern again, or do you think there's something else going on?
I mean, it is reaccelerating. You like, no one can say that inflation is not reaccelerating. I mean, it literally went from 2.6, I think, in May to now almost 3% again, right? So the thing is, like, people are looking at history and saying, well, look, inflation reared its ugly head in the past. It could do it again for us. So we don't want to be in a position where, we start getting another cycle of inflation, and now in order to kill that inflation, we have to start raising again. And the thing is, the Fed would lose a lot of credibility if that happened. So I think they're just trying to get ahead of it. I mean, there are people on the Fed board, voting FOMC board, that are basically saying, like, they're looking 6 months out, 7 months out and saying, look, we're starting to see all the hallmark signs of a disinflationary environment, and we should be preemptively cutting before shit falls, like things fall apart.
Right.
As an example, you're looking at, like, me personally, when I look at this market, I'm looking at shelter prices are coming down, right? Rent is starting to come down. You're seeing a rollover everywhere. You're starting to see a lot of companies announce layoffs, right? You're starting to see AI starting to creep in and so companies focusing on efficiency. All of those data points are being there. And then now you've got, from a political side, you've also got all of these policies that are going to be coming in next year that are counter to a supportive federal government side when it comes to spending. So a lot of the labor cuts on the Fed, like employee, what is it called? The federal employees, a lot of them have been, taking that buyout offer, not what is it called? The early retirement or layoffs or whatever on the federal side. All of those numbers are going to be hit. Private side, you're seeing come down. Unemployment is starting to go up. While there is a little bit of like liquidity support here and there, I think a lot of the liquidity that the federal government used to spend is gone. And so a lot of that liquidity is coming out. So now the question is, you've got mass deportations and all of these other things happening. And a lot of that liquidity that was supporting a lot of these people when they were coming into the country, all of those liquidity supports are gone. Student loan moratoriums, all those are gone, right? Housing moratoriums and all that stuff, all of it is gone. So at this point, you're starting to see all the impacts of that support system pretty much 100% done. So 2026 is going to be that year where the consumer is going to have to stand on their own 2 feet again. In which case you're definitely going to see like a reset of expectations. So the question now is, I can see it 6 months ahead. I think Steven Moran has kind of like highlighted that. I think even some of the Fed officials like Waller are saying, look, we don't want to risk unemployment getting out of control because inflation will go down if unemployment goes up. But that's the wrong reason why you want inflation, how you crush inflation, right?
Right.
So, I mean, not to mention, if you look, AI is also very deflationary. That's not even a question at this point. So a lot of these things are coming in, and I think the Fed is, in my opinion, in the short term, the hawks are correct in saying that it's probably prudent to just wait a little bit. Like a quarter basis point cut in December is not necessarily going to do anything from a liquidity standpoint that's going to help boost stuff, but it definitely, like, withdrawing it right now is sort of like taking away the punch bowl while everyone is having a good time at the party. And so right now the party is, we're at the party right now and someone just turned off the music for a little bit, or the music is starting to slow down. And some people are taking that as a sign of, hey, I better get out of this party. So some people are starting to leave. The question is, do you want to keep dancing?
So let me ask you this question. And I think this is really strong analysis. Going into 2026, and you reserve the right to change your mind as you get more data. But if you had to give me a preliminary view based on what we've seen, Morgan Stanley says 7,800 by the end of 2026. All the kind of core basic bullish arguments go into that analysis. Do you think 2026 has a shot of being a bull market if the labor market collapses, if inflation doesn't slow down, like if the AI trade gets wobbly? Or do you think it's a flat year? Do you think it ends up being a 2022 repeat? How are you thinking of it at this moment after the past couple of days?
I mean, I think there's going to be a point where things get oversold again and we see like a 10% plus correction in the markets. But I think those are like opportunities to add rather than trying to sell things off and try to call a top. And I'll tell you one of the reasons why. It's because you're literally going into a rate cutting cycle, right? From a business standpoint, a lot of companies, their profit margins are directly linked to how much money they can borrow, like how much money they can borrow and at what rate. So if you're a business that's levered up, and you're borrowing money and the cost of capital is 7, 8, 9, 10%. And then all of a sudden now the Fed is giving you, let's say, 100 basis point cut, and your borrowing costs shrink by 100, 200 basis points. That's pretty good for you. It's not bad. Not to mention from an equity valuation standpoint, it does support valuations, though we are at outside of the Mag 7. I don't think that there's a giant quote unquote bubble. the Mag 7 is definitely getting a crazy premium rather than, but then again, the Mag 7 has also got growth and they've got profitability going up. I mean, it's just, like I said, no one can stop the Mag 7 except for the Mag 7. So I do think that there's opportunities for the rest of the market to sort of catch up a little bit, where people do say, you know what, with rate cuts, I think this business is going to do well, or that. Like, I'll give you an example. Norwegian Cruise Lines, right? I've been into the cruise lines. I've been doing really well on them. Norwegian took a hit recently. They're loaded up to the boat with a lot of debt in the balance sheet, right? So they've got about almost 13.6 billion in debt. Their cost to borrow is about 4.1, 4.2%. Now, the thing with Norwegian is that, it's right now in the middle of a CapEx cycle where they are spending money on a lot of these new boats and they're generating significant amount of cash flow, but that debt load is high. So the thing is, for them, their stock is going to be rated based on the ability for them to kind of refinance that debt at attractive rates. So if you're telling me that right now I have $13 billion in debt and every year I'm going to pay down, let's say, 500 million of that debt, but the thing is, the cost of interest keeps rising higher, higher, and higher. That means that now the EPS that you can show keeps going lower and lower and lower. So even if you're paying down the debt, because the cost of that debt refi keeps going higher, it's going to impact your EPS. So some people are saying, well, I'm not going to pay a premium for a company that has a ton of leverage on the balance sheet while interest rates are higher than they were 5 years ago when all of that debt was issued. So because of that, a lot of companies are getting re-rated. Now, on the other hand, if you're telling me, hey, guess what? Norwegian can refinance at 100, 200 basis points less than what they're paying right now. That's amazing. People will be like, hell yeah, we want to be in this. That means that their EPS is actually going to be higher in 2026 and 2027.
So the underlying structure of an easing cycle, you're saying, is inevitably bullish, not to mention all the money on the sidelines that probably, which, speaking of that, let's go to money market funds.
I would say I wouldn't say it's bullish, but I'd say it's supportive, right? It lets you support these valuations for a longer period of time, right? So if you're telling me like, hey, listen, in a rate cutting cycle, you're not going to see equities rise. It'd be very hard to see how that could happen,
That is a fair point. That is a very fair point. Money market funds decreased by 15 billion to 7.52 trillion. Nothing too crazy there. Mag 7s, outside of Tesla and Apple, do you think the other five are really trading at an aggressive premium? Google, Nvidia, and Meta, or do you think the rest of them are relatively priced in a reasonable way?
No, I think right now it's just people are scared that this AI thing is not real. Michael Burry really did not do anyone justice by putting out a lot of that information and getting the market spooked. A lot of people look at this and say, wait a second, the guy that called 2008 is saying that there's a bubble. And the challenge is, even if you personally don't think that there's a bubble, you could have a lot of clients that are reaching out to you and saying, hey, is there a bubble? Michael Burry says there's a bubble. Hey, is there a bubble? Then Michael Burry says there's a bubble. So, you as a prudent manager of risk are going to say, you know what, maybe I don't want to have 60 to 70% of my portfolio locked in these AI trade, in the AI trade. Maybe I should turn my allocation down to, let's say, 40, 50%. So I told you, I think it was last time, or was it with Sam? Right now, I'm 60% of my portfolio is like fixed income, right?
Yep.
Now, the thing is, if the market dips hard enough, and I think it's getting to that point, I'm actually a buyer of a lot of these names that, sure, I could see some additional weakness. Like right now, I'm very attracted to Meta. I think Meta has got a great business. It's not going anywhere. Could they have a couple of bad quarters where they have to kind of digest some downward moves? Yeah, sure. But long term, I mean, it's a cash flowing business. Like, there's no disruption in Meta that I can see, unless you can see, like, hey, there's a new product out there that's replacing Instagram Reels. Like, I don't see it. So I think this AI build out, data center build out, it's getting to the point where it is causing a lot of people to, put some fear into the markets. But I think this is just another opportunity to find these great companies with great businesses, expanding profit margins that are going to keep expanding with the adoption of AI. And, the growth rates are, look, if the growth rates are starting to slow down for these companies, then it's something to worry about. If you see margin pressures, like significant margin pressures, it's something to worry about. Now, there can be some argument around the fugazi nature of how depreciation works with, hey, there's been some, they went from 3-year depreciation to 4 to 5 to 6, and somehow that's not necessarily like kosher, even though technically it is kosher. I can't say like that I'm in 100% agreement with the idea that you can keep extending your useful life thing. It's just seems artificial to me. But at the same time, I'm like, dude, it's not going to materially add to their earnings, like Burry is saying, we're overstating about 20% of their earnings and 30% of their earnings. I'm like, no, I mean, their useful life is their useful life. The one thing that I have been reading that I'm not so sure people are taking into consideration is the same monetization rate that they were making on original cloud compute may or may not be there. So where original cloud compute like AWS and stuff, it was high margin, and so you got paid back relatively quickly. The AI compute, the profit margins are not necessarily like out there yet that would justify that additional premium that you're getting. So a lot of people are looking at purely on, oh, look, this cloud provider's revenue is growing at X. That means it's great. But then I'm like, okay, but what's the margin on this new additional revenue, right? Especially when you include depreciation and all the other stuff that's supposed to go in there. So the monetization rate on AI compute, unless that gets broken out, I don't know. We'll see.
Real quick headline, guys, or two headlines. Billionaire David Shaw, who I've heard of in the past, but I'm not that familiar with him. He's a former hedge fund manager. He just took a 6.4% stake in Opendoor. Opendoor flat after hours, but he bought 60 million shares. And that's him, not his hedge fund. It looks like it's personally him. So
guys, just be careful, man. A lot of these guys, they come in, they're like, "Oh, I'm a billionaire," but they have no intention to be in some of these things long term. I mean, you remember Ryan Cohen?
100%. Yeah.
So I think sometimes we take a lot of these entries by quote unquote big people in, and we think like, oh yeah, you know what, I'm being smart too. It's like, no, sometimes these guys, they understand that this is a trade for them. So just like I said, do your research. If you have some risk, you want to take it, by all means. I'm not saying no, but just understand that just because a rich person goes into something doesn't mean a rich person is not going to get out, before you can get out.
Right. And then Verizon after hours says it's going to record a $1.8 billion severance charge in Q4, plans to eliminate over 13,000 positions by next month, and expects a significant reduction in outsourced labor costs. That's actually got the stock moving after hours. It goes back to the argument we were having about layoffs. I mean, these companies are not hesitating to increase margins.
A lot of my cousins going to be out of a job in India, bro. What's going to happen to all the call center bros, huh? Now we're going to get, damn it, man. Now we're going to get a lot more Walmart, what do they call it? Gift card calls again, It's like, this is Steve calling from the IRS. You have to pay your taxes now. You have not paid in a while. And I'm like, yo, bro, what's up? How do I pay you? You have to go to Walmart and give me the coupon code. Bro, why do our people scam so hard, man? What's going on? Huh?
I don't know, but nonetheless, that is a big part of the economy that's likely going to get replaced, which are these call centers. And that's inevitable. So I don't know what Trump's going to do about it, what the next administration is going to do about it, but AI is definitely getting ready to take.
By the way, it's not just us; it's also the Philippines too. Okay, so I mean, they're not the scammer. I haven't come across any scammer Filipinos. Indian scammers are all over the place, but the Filipinos, they do have a lot of positions that are outsourced out there. Like half the time I call, if I ever have to call, I have T-Mobile. If I have to call, it's usually someone from the Philippines. Who have you got as a customer agent? Like, what's the nationality that you typically get?
The amount of times I've got scammed by an Indian who's calling me, like it is more often than not.
Yo, bro, with AI, it's kind of scary because you can't even tell that they're scammers anymore because the accent's gone, right? They sound like a British gentleman, like, hello, sir, how can I help you? Would you like to pay your taxes and Walmart gift cards? You know, you're like, yes, of course. I trust the British accent. You know, Nigel wouldn't lie to me. I don't trust Nimesh, but I trust Nigel. You know,
you're good at the accents, dude. I'm really bad at the accents. You're good at it. Here is Dan Ives on the sell-off.
Okay.
To discuss is Wedbush's. It speaks, and you've talked about a lot on the show, like worries about circular financing, like where this is going to go. Can the data centers going to get built? Is there capacity issues? Look, I just continue to view when you put the pieces together of the puzzle, as well as our 3 weeks in Asia. This is third inning, top of the third, one out of this AI game, and that's why I just think names like NVIDIA, days like today, you buy names like Oracle, Microsoft, NVIDIA, because I believe this tech bull market has another 2 years left.
I mean, as a baseball numbers guy, we now know sometimes the third inning is your high leverage inning, where you got to kind of bring in the best arms and try to put down a threat. And I'm wondering right now if NVIDIA's numbers, and I've been kind of puzzling over this all day, as great as they are and as much confidence as Jensen has about the next 4 or 5 quarters, you wonder if everybody can have equal confidence in the customers that are giving him all that money and allowing him to earn those margins on their spend, and when they're going to sort of get clarity about the payback.
Look, it's a great point, but I would just say, look, in the U.S., 3% of companies have gone down the AI path. Europe, 0. You look at, in Asia, ex-China, minimal, less than 1%. Sovereigns, Middle East, just starting. I mean, my whole point is that, right now, demand to supply is 12-1 for NVIDIA chips. And of course, AMD and others are going to play. But the reality is that we are still early. I mean, you're talking more money is going to be spent in the next 2 to 3 years than the last 8-10 years combined. So I get some of the worries, but I believe the bears will continue to watch this AI party from the outside looking in as they continue to prove it out. And I think Street's underestimating numbers anywhere from 15 to 20%.
Right.
Next,
but is that not the bull case for NVIDIA and the whole food chain for the infrastructure build out? Can it not also be the bear case for the Metas of the world and the Microsofts that feel like they're on this unending treadmill of having to spend, hoping that they get the return?
Yeah, and I think, but I do think it's a little more than hope, because the reality is that the use cases, if you almost put the pieces together, look at Palantir, look at MongoDB, look at Snowflake. So you see the use cases are exploding. Look, and it's an arms race that they are having to continue to spend on, and you're going to see the same in the Oracle. But I think Meta, we look out 12 to 18 months. This was a table pounder moment, just like we saw with Alphabet as a table pounder.
Well, I was going to get to Alphabet because that's a really fascinating situation, how it's gotten revalued higher, tremendous amount of sponsorship all of a sudden of this name that people really had a lot of skepticism about not that long ago. Now, their new model is getting raves, I guess, in terms of its performance, the new Gemini. And also, they did it, kind of with their own processors. So how does that play into the whole, NVIDIA at the center of this question?
Sure. Well, NVIDIA obviously fueling it centerpiece in terms of one chip in the world. But the reality is Alphabet, you go back 6-8 months ago, New York City cab drivers bearish on it, right? So it's one AI that is ultimately going to destruct the model. The opposites happen. I mean, I think now you see Sundar and what's happening at Google, they're on the offensive. I mean, you look at what they've done with Gemini, this is just the start, because the reality is in Cupertino for Apple, who are they going in for AI? It's just a matter of time until they do the Google Gemini deal as well.
Yeah.
So that's why you've seen that stock at continue re-rating, bull case $400. My colleague Scott Devin, we've done a lot of work. Look, I believe this is one. This is a name you continue to own, just still early days.
And then,
any thoughts on the overall comments by Dan, Chris?
I mean, I'm in agreement with Google. I think Google, the one good thing about my portfolio right now, it's being held up by Sundar, bro. Thank God for Sundar. I mean, it was hard all through this year. Anyone who was in Google, guys, dude, it was horrible watching the entire market run, and people were just like, Google is shit. And then Brad Gertzner would come out every other week and be like, guys, there's no more search mode. No one's gonna use Google in like 5 years. And so I'm like, Brad, stop. Like, you're just being way too hard on Google
Munster
right
called them the next eBay. I mean, there was a lot of fun.
Yeah, and it was just like y'all realize that Google still has a lot of assets behind it. Not to mention, unlike the other companies, they don't have to pay the NVIDIA tax as hard. You know, yeah, they probably used NVIDIA GPUs here and there, but they have their own infrastructure that saves them a whole lot in marginal cost. So I think even from a long-term perspective, like which of the hyperscalers do you think is going to benefit the most from the current wave of AI? I think number one, the biggest beneficiary is going to be Google because it controls its TPU ecosystem, right, by itself. It controls all the models by itself. It has the financing that, you know, it doesn't have to rely on debt in order to pay the NVIDIA tax, quote unquote. So I think Google is fine. Not to mention they have other drivers of growth like Waymo. I mean, you see how many cities that they've expanded in now, right? They've got partnerships all over the place with advertising, with YouTube that's outside of the AI craze that, like I said, that can support their margins. So all of these things lead me to believe Google is going to be fine. I would say number two is Amazon, because Amazon is, you know, it's just on another level in terms of like where they are with their overall cloud exposure. Like they are entrenched in so many businesses. So they're going to be fine. Not to mention now they're starting to launch their Trainium chips and everything else is going to be there. Then I'd say probably Microsoft, and Microsoft, like I said, they're like dominant in enterprise. The only thing is I don't necessarily hear a lot of like AI related products that come out of Microsoft, but that's only because like maybe they don't highlight it nearly as much. And I know that I know they have Copilot, but you don't hear like everyone like raving about, oh my God, did you guys hear the next Copilot is out? You know, like just not there. And last but not least, you've got Meta, which technically isn't a hyperscaler. But I do think that Meta is going to end up somewhere down the lines as a hyperscaler. I can't say that they're going to be definitely like an infrastructure play where they're like renting out compute or whatever, but I do think that there are software libraries and everything else like that the Meta controls that it's going to license, and I think that's the way that they're going to go. You know, and like I said, the one thing I never have a doubt about is Zuck being pragmatic enough to make money. This dude, he will fire half the company if he has to make money for shareholders, because he is one of the largest shareholders. I mean, his entire what is that thing called? Like reputation. Reputation is one company. You know, he didn't inherit Meta. He is Meta. So in terms of like survival potential, bro, he is the only one of the mega caps, like outside of NVIDIA, that is the founder that's still running shit. You know?
Yeah, and he also has a majority of the voting class shares as well. Okay, let's do this. So given everything that has happened over the past couple of weeks, and obviously opinions can change in the coming weeks, 5 stocks to construct a portfolio for next year. Whether you own them or you don't own them, put it in the chat as well. Put your 5 stocks separated by a comma in one comment. Given where we are today, what 5 do you think could protect you, grow, beat the S&P in 2026?
I'd say Google is definitely one of them. I think Google has a clear path to 5 trillion. I think what we saw the other day is just the start. So I'd say Google. Now, does that mean that right this second is a greatest entry price for Google? Probably not. But if there is a meaningful pullback, then definitely want to buy Google. You definitely want to have Meta exposure. Meta could take a little bit of a hit, but it's going to do fine. UNH may not be that great of an investment for 2026, because 2026 might be a transition year for UNH, where they're knocking off old cobwebs, right? So basically they flushed out a lot of their problems, but you know, the market, it's one of the challenges that you tend to run into is that you know, you have this year where you just have to rebuild your existing businesses. Now, have they started resetting a lot of the pricing on their insurance plans? Yeah, absolutely. but that also means they're probably going to, lose some members here and there. So their total revenue might actually come down slightly, but their margins might recover. So the market might reward them for margin recovery, but might also punish them a little bit for, not as much top line growth. So that's something to just keep an eye on when it comes to UNH. But I would say, yeah. So I'd say that I'm actually bullish on Norwegian Cruise Lines, NCLH.
Okay. Verizon, would you put that up there?
Verizon will benefit, but only under certain circumstances. The primary circumstance is probably rate cuts. The challenge with Verizon, though, it is a very low beta stock. So if you think that Verizon can go from like $40 to like $60, it ain't happening. The most you'll see is like maybe a 20%. I'd even caution to say 20%. I'd say probably like a 10 to 15% move on Verizon, plus another 6% from the dividends that you get. So I don't know. Like, is this supposed to be constructed for total portfolio returns or for safety?
If you had to pick 5 stocks to go long next year, that's it. That's the question.
Mm-hmm.
I understand not wanting Verizon because it's not going to be enough growth in the portfolio.
I mean, it'll protect you against the downside. Remember, the portfolio construction isn't just about, hey, what is going to like go up? It's also going to be like, what's not going to go down significantly.
But would you put it in your 5 if you had to make that choice?
Yeah, I'd put it in my 5. That'd be worth it.
So you got one more: Google, Meta, Norwegian, Verizon. And I'm just going through this exercise just to, I don't know, we're near the end of the year. I know we have a lot more data to come out over the coming weeks, but just to kind of walk through a mental model of how people are thinking of 2026, given everything that's happened.
Huh.
I mean, it's not as easy to make the same picks you made last year this time for all of us.
Yeah.
Right?
I mean, like I said, I'm still doing my research on what to kind of like pick out next year. And one of the things that I'm really leaning towards is mean reversion with a lot of value names that may catch a bid now.
Amazon?
No. Put Novo Nordisk on there for me if I had to say.
Okay.
Yeah, I think Novo has the ability to kind of reaccelerate its revenue growth if oral comes out, and then also GLP-1s, because they're getting cheaper. So even though you'll see like compression on margin, but the volume of GLP-1s may end up exploding next year. So that the key is if you expand the total addressable market by significant margin, then you're going to see that rise up. Now, the challenge with Novo Nordisk is that Eli Lilly has a superior product. So, you know what? Take Novo out, put Eli Lilly on there for me. Sorry.
I don't hate that. I do not hate that at all.
Yeah.
All right, guys, we're going to end it out in about 20 minutes, but here's Jensen, brand new interview just now, came out 20 minutes ago. Let's take a look at what he has to say. This is after his stock got cut by 5%, after going up 7%. So we'll get his thoughts and then we'll keep going from there.
And so I don't know exactly which one, but one of the things that is really great about NVIDIA's architecture is that we're so diversified. We run AI is not just one thing. It's not just one language model or one chatbot. AI is a system of models, and you could use it for, of course, chatbots, but you could also use it for physics and biology and chemistry and, of course, robotics and self-driving cars. And even within language models, there's so many different architectures. NVIDIA's architecture is the only one in the world that runs literally everything. And yesterday, we announced a big partnership with Anthropic, and now we're the only architecture in the world that runs every single premier AI model, as well as every single open source model, and of course, every single version modality of model. And so our versatility makes it possible for us to have a lot of different customers. And for all of those customers, we can bring them a lot of other customers that ultimately use their cloud capabilities.
Yeah, it feels like all roads are leading to NVIDIA. How are orders for your next generation chip, the Rubin, trending? And are you still on track to ship them at the end of 2026?
Well, I announced at GTC that starting this year, because we started shipping Blackwells, over the course of this year through the end of next year, we have visibility of $500 billion worth of Blackwell and Vera Rubin. And we'll start shipping Vera Rubin in Q3 timeframe of next year. The silicon is back. It is working wonderfully. Engineers across NVIDIA are bringing up the system. It's doing it beautifully. And we're on track for volume production in the Q3 timeframe of next year. In the meantime, I announced that we have $500 billion worth of visibility, but in the last 30 days, we announced some major new wins that were not included in that $500 billion. So we're adding, of course, the Anthropic opportunity. We're adding Elon's xAI now being deployed in Saudi Arabia. We announced a partnership with Humane, and those GPUs have been licensed, and they're going to be deploying in Saudi Arabia. And we also announced that AWS is going to also build 150,000 GPU AI infrastructure in Saudi Arabia. All of those are all net new. And so orders are still coming in. And so this is going to be a pretty busy year for us the next year.
It sounds like then the current quarter is going to be crazy good. Can I say that? What do you think?
Well, we guided to a much larger quarter next quarter. And so the guidance that we provided is crazy good. I would agree with that. And but you know, we're in
pretty much Jensen saying the same stuff he said yesterday. Chris, do you kind of think like Jensen did his job and you can't really blame him for this type of a sell-off?
Yeah, I mean, I can't blame Jensen. The challenge that Jensen is running into is that a lot of people think that he's trying to engineer like these sales of NVIDIA chips, right? Which technically that's his job as CEO, right? But I think a lot of companies, they see what the possibilities of AI are, but they don't have the capital to build it, right? So Jensen is saying, look, I don't mind financing your early investments, right? And the thing is, if you think about it from an NVIDIA shareholder perspective, I mean, what's his name? Jensen is basically seeding the next generation of AI companies. So even if, let's say, 9 out of 10 of them go completely to shit, they don't never work out, whatever, and NVIDIA loses all of their money investing in their equity, even if one of them becomes the next Google, who gives a crap, right? Like the challenge that NVIDIA is going to have, in my opinion, in the long run is always going to be tied to the cyclical nature of their industry. There are points where semiconductors are super hot, and then there are points where semiconductors just aren't needed as much. Then there's all the issues around capacity around electricity that NVIDIA is inevitably going to run into. As much as the next generation of chips are really good, if there's no electricity to provide that grid hookup, then what the hell is the point, right? So there are challenges when it comes to the AI infrastructure side, where I think it's something that's out of his control, you know. Unless Jensen's like, you know what, he can't even do that. He can't even go out there and be like, let me buy a power plant company and start building power plants now. The time to really started to build out these power plants before the AI wave got in charge was 5 years ago, you know? So right now, I think we're hitting the upper limits of what's possible with the current current grid that we have. And I think this is not a bottleneck of need, in my opinion. I think it's a bottleneck of capacity from something that NVIDIA doesn't control. And I think that's one of the reasons why you're seeing why everyone is so euphoric on these AI data centers that were formerly Bitcoin companies. Like the two that I think are going to benefit significantly, and they were up today. I don't know if they got re-rated down.
All of them got hit bad. They were up like almost 20%, most of them in the morning.
So one of the two that I would say are probably the most interesting to me outside of Iran and Nebius, because I think Nebius and Iran, not necessarily Iran as much. Nebius is like trying to become their hyperscaler themselves also. But TeraWulf and Cypher have some major contracts with Google. And they also have contracts already with, they have contracts. See, the thing is, everyone is focused on the hyperscalers that they have partnership with. Look at their partnerships with the electricity companies, because they have the hookups already. So they have the infrastructure already, which makes them more valuable. You know, like right now, if Google goes out there and says, I want to build a data center in this location, the first thing you run into is, okay, where's the electricity going to come from? You know,
well, that's why the U.S. government gave $1 billion loan to CEG 2 years ago as well, right?
Yeah. So I think the electricity bottleneck is the one that is going to be slowing down growth in the sector, not necessarily demand. So do I think that we get a period of digestion? Probably. You know, it doesn't mean that it's like, oh my God, the AI trade is dead. That's why I'm saying, like, next year, if a lot of these companies get re-rated lower, it's not a bad time to buy, you know.
All right, 2 more questions for you, Chris, and then I'll probably stay on a little bit after, and then we'll be done for the day. The first question is, and I see a lot of people asking about this in the chat. I can't give anyone an answer because I honestly have not looked into it, but there's a lot of posts on X going viral about NVIDIA's accounts receivables, unpaid bills, inventory. I don't know how much you looked into it, but do you think these are solid concerns, people now questioning their accounting practices, or do you think this is nonsense?
No. I think they look, whenever you have these massive build outs, okay, and like massive amounts of demand, the first thing you have to do as someone who's a supplier is what? You have to expand your existing supply, right? That means that yes, your channel is going to be stuffed because there's just so much demand. So you're asking for more up front because you know that when these chips are coming out, people are already going to be buying them up. So it's kind of like Christmas, right? Oh my God, everyone bought all this stock in October. Yeah, but they bought it for Christmas because they know Christmas shopping season is around the corner. You can't order all this shit December 1st and expect that it'll be on the shelves to be sold, right? So all the people looking at this, they don't understand the basic concept of inventory management. If you see demand coming for December, like let's say right now you're planning, just indulge me. You're planning for Christmas sales. Christmas is your busiest time. When do you start ordering and putting stuff in the warehouse? Do you do it on December 1st or do you do it in October? So all this demand, NVIDIA can already see coming in for their next generation stuff. What do you think that they're going to do? They're going to order a lot of it right now so that when the time comes, they'll be ready to go. Do you know who didn't do that and who got screwed over by that? Novo Nordisk. Novo Nordisk did not anticipate the amount of demand that they would get for the GLP-1s, right? What happened? They didn't have enough supply chain. Then the compounders got involved because there was a shortage. You know what Novo Nordisk did now? Their oral pill hasn't even been approved yet by the FDA. They're already starting to print those out there right now. They're literally building them out. The pharmacies are already like printing those pills out, waiting for that approval to come in. Because they're like, no, we're not gonna get caught like in the same problem.
So you think people are trying to be smart going through the 10K and the 8K to be like, look,
everyone is looking for a reason to sell. That's, in my opinion, so many of the arguments that people are making right now are based on trying to find that smoking gun.
Yeah.
To be honest with you, I'm trying to find the smoking gun, and I can see some things here and there, but I wouldn't necessarily say like, oh my God, this is like the end of NVIDIA. Like NVIDIA is a fraud. Like some people are really going hard in trying to call out like this thing. Yet, bro, I'm using their products every day. You know, I'm literally going into these different LLMs at work. Do you know, like the last 4 days, what I've been doing overnight? I've been upgrading client server, like application servers, because we're loading in all these additional AI programs that we're using in my hospital. You know how boring that shit is, but at the same time, clients are, doctors are asking for it. Doctors are saying, I need this, I need that, I need this. This, all the vendors are going to the doctors and saying, I have this AI product that this guy, it's going to save me X amount of time. It's going to make me a more efficient radiologist. We're paying these guys like hundreds of dollars an hour, right? If it makes them 10% more efficient, bro, it saves us millions at the back end. So we're all about, hey, listen, whatever tool we can provide you guys that makes your life easier and more productive, we are willing to make that commitment and spend that money. Now, that's reoccurring revenue for the company that's all built on this AI environment that all goes back to AWS. Like the program that I can't really talk about it too much, but basically all of this stuff runs on AWS. So all the money is out there. Now, some people are saying, they're using really dumb metrics. And I don't want to call it out, but they're saying, well, $20 a month, you would need like half the planet to be subscribed to make money. And I'm like, look, that's not where these guys are going to make their money. Okay, AWS is not relying on Prime member. Like Amazon does not rely on Prime memberships for their profit, dude. Does it help? Yeah. But do you know where Amazon makes their money? On enterprises. That's where enterprise, like the margin are the highest. So I think this notion that people are trying to do like, oh, you need like half the population of the planet to sign up for ChatGPT to make money. I'm like, bro, good luck with that thesis, because everyone who's using an API right now, they're all linking to Gemini, they're all linking to AWS, they're all linking to ChatGPT and OpenAI and everything else, man. So, yeah.
That's a fair point. I ran, by the way, guys.
Chris does not work for Wellstar. Chris, that's the wife. My wife used to work for Wellstar. So she got actually a new job. He works in Cobb County. I don't work in Cobb County. Ha! I'm glad people don't know. Yeah.
I ran down 5%. Not sure why that. Nebius and Corey are not down. So there has to be some news on Iran, but that one specifically is getting hit after hours.
Yeah.
All right, Chris. So last question for you is emotionally, do you have any advice? You are a bit older. You've been through these cycles for people trying to navigate a drawdown like this.
Peter Lynch. Use the Peter Lynch model. Find the companies, the stocks, whatever, that you know 5 years from now you're going to be using. So if you think that, you know what, you're investing in a stock that you're not going to be using in 5 years, or it's not going to do well in 5 years, regardless of whatever the financials are, then don't be in it. You know, if you think that you're smarter than the market, you think that you can get in at the bottom and get out at the top, good luck. That doesn't work out very well. You know, so I would say expand your investment horizon to 5 years from now. Go from there, you know, and don't think about, okay, what's overvalued today, what's overvalued tomorrow. Like, think about 5 years from now. That's it.
Essentially, your advice is it is really easy to handle a drawdown if you have very strong conviction on the names you hold. And if you truly believe in them, AKA you use their products, or you just feel very passionately about their products, like it's hard to get that afraid when they go down. In fact, you get more excited when they go down, right?
Yeah, sometimes the market overcorrects. Like I said, you remember Meta? Meta had no business going into the $80-$90 range in 2022, but we got there, you know. And that's the thing. Like, you could cry about it and be like, "Oh my God, no! Like, I've lost all this money." And I'm like, bro, it's to real investors that was just like, "Oh man, that's an opportunity to add more." You know, as long as.
So when do you've been trying to get Hood for a long time? Is there a price you're looking for? 75, 80? Is there something that gets you interested?
It's getting there. I'm not gonna lie, it's getting there. It's getting there. I've run out of capital, to be honest with you.
That's fair. That's a fair point.
You know, that's the honest truth. I just don't have, like, I have to right now pay taxes, and my taxes are going to be gigantic. And now I'm looking at losses on top of my tax. And it's like, I had all this money that I was like, okay, this money is only for tax, and I had put it to the side. And then I got greedy because it's really hard to keep money out of the market. And I was like, let me put some of it in there. And I'm down a bit on some of the positions. So I'm like, whatever. It's fine. It'll be fine. So, yeah.
All right, Chris, thank you so much. I think people really, really appreciated having some of your insight on a day like this.
Guys, listen. The market is going to be the market, okay? Long term, everything is fine. Can you pull up the S&P 500 and do like a 15-year chart for me?
I mean, we could definitely go max and just see what it looks like here.
Okay. Do you see those small blips down? Do you see how short they are?
Yeah.
Look at that. Some of them are literally like months, like maybe 6 months apart. Okay. Unless there's a giant credit crunch and a credit cycle, you don't have to worry about a long period of what is it called? Like a long period of a drawdown. Okay. So if you're telling me right now that this is the same as the year 2000, it's not. Like the year 2000 is more reminiscent to me of 2021 than it is what it is today.
Yes.
Okay. Y'all, if you remember, and you were around for 2021, so you'll know we had Energy Vault, a company that was moving blocks, generating electricity. You had the amount of bullshit companies that were out there. You had valuations like $10 billion on a Bird scooter. You remember that bullshit?
Yeah.
Right? So that's more reminiscent to what we saw in 2000. So 2000, like the dot-com bubble, was literally like very similar to the SPAC bubble, where you had these valuations on companies that were not profitable. What we're seeing right now is you're seeing profitable companies getting value, like high valuations. To me, that means, could there be a correction of about 10, 20%? Sure, maybe. But at the same time, when you consider that these businesses are growing 10, 15% per year anyway, that correction ends up getting re-rated in about 6 months, maybe a year.
Right.
You know, oh my God, Google is down 20%. It grows 20%. Its earnings 20% per year anyway. So whatever it moves down, it just means that the share buybacks will probably end up eating that drawdown alive and just creating a higher path moving forward. Not to mention the entire planet right now is investing in this market. Like, tell me right now if there's anywhere else on the planet that you would allocate capital towards.
Dude, it's hard just to be able to understand the US markets. I can't even imagine trying to understand the Japanese markets or the Indian markets or the South Korean markets. How would I invest?
The Europeans are taxing themselves to death. The Japanese, they've gone off the rails with they've gone off the rails with the printer, right? And basically they're dealing with inflation finally after I think 30 years of their issues. The Chinese are hitting deflation like there's no tomorrow. Their growth rate is absolutely slowing down. There's a possibility in India to be in some Indian markets, but to me, they're still probably in the most early part of the what is that thing called, the cycle, that there are probabilities that you could make some money on Indian stocks. But the thing is, they don't necessarily have a presence outside of India. So it's really hard to analyze a company that's in India for the future growth. And not to mention, India is always mired in politics, and I'm talking about this isn't Republicans get in charge and Democrats go after them. I'm talking about in India, politics are on another level, bro. So there's just not a lot of places where you can park your money outside of the US. So I think naturally a lot of capital just flows back into the US anyway. I mean, for God's sakes, look at the White House yesterday. We had the Crown Prince of Saudi Arabia, the guy that literally is sitting on a printer, ATM. And what is he doing? He's schmoozing around with the CEOs of the largest companies in the US. You really want to bet against America? I wouldn't.
It's a hell of a point. It's a hell of a point. And at the end of the day, there is not a single country in the world besides the US that has the tech companies that we have that are so international in their business. You can't go to Europe and find an Amazon. It's not easy to do that. So then eventually an oversold company like Google will get the capital if they can put up the earnings. And we know, given the size and scale and magnitude of a business model like Amazon, Meta, Google, Microsoft, they will put up the earnings, which means the capital will find them.
Can you do me a favor? Can you put up that video of AOC criticizing the AI bubble thing? I think that's one of the biggest problems that I see in the current market, where I think some young people are so if they're not invested in the stock market, they're sort of getting disillusioned with how the economy actually works here in the US. We are a bunch of goddamn risk takers. We are pioneers. We will put our capital where the ideas are, and we will risk things. But at the same time, that is exactly why we are always perpetually growing. Now, look at what this idiot has to say
today about the deadly consequences of some of these AI chatbots are pretty extreme and horrifying. We're talking about suicidality. We are talking about people entering AI psychosis in some circumstances. And I think it's important for us to take a step back as to why and what is driving the openness to these models, allowing this to occur in the first place. And I want to also shed light on what that means about an economic story about AI, in addition to a psychological story about it. Dr. King,
can I just pause that for a second?
Companies change or evolve?
Listening to her makes me want to kill myself. Literally, the stupidity that she comes out with sometimes makes me want to kill myself. Does that mean that AOC should be, her freedom of speech should be taken away because I get suicidal listening to this idiot? No, that's how personal responsibility works. Continue, Amit. Sorry.
Of their privacy policies or other kinds of policies as they seek greater profitability models?
Certainly, we've seen them change their privacy policies as they've rolled out AI products.
Yes, and I imagine some of this has to do with their business model, correct?
Yes.
And I think this, when we talk about why AI models are going to such extremes and some of the extreme outcomes that we are seeing in terms of how people are using AI, in terms of emotional companionship, to, again, extreme cases of suicidality or psychosis, this also, I think, tracks with the pressure that these companies have to turn a profit that they have not yet proven. Just this morning, the Wall Street Journal reported a significant drop in the US stock market with the headline, AI bubble fears hit stocks. Now, this also contrasts with what we've been hearing from the Trump administration, that the economy in general is thriving. And he's been saying that the economy is booming, but it's only 7 tech companies that are booming: Microsoft, Google, Amazon, and Meta. And they're driving this growth in just one sector, AI. So the entire US economy growth can be tracked down to 7 companies and their AI growth specifically. At least 40% of economic growth this year is attributed to these companies alone, and 80% of stock gains this year came from AI companies. But people are justifying these levels of investment because of the promises that the CEOs make that there will be a return on that investment. So for a company like OpenAI, their value is based on the expectation that they're going to figure out how to make a profit out of it, and they haven't. And so generating this increased human dependency that can be mined, because it's not subject to HIPAA. Is that correct, Dr. King?
Right, it's not subject.
It's not subject to HIPAA. So people's deepest fears, secrets, emotional content, relationships can all be mined for this empty promise that we're getting from these companies to turn a profit.
Can you pause?
And the reason I bring all of
this, she speaks all this garbage while look at her hand. What's on there on her index finger? It's an Aura ring. It's an Aura ring. The one that tracks your, your health monitoring.
Yep.
Like, come on. You don't see you're worried about people talking to getting your data over to these big companies while you're wearing a ring that does exactly that. I mean,
yeah, and not to mention, if these 7 companies didn't exist, I mean, you can paint an ugly picture, but the picture of them not existing, I think, is much uglier.
This up is because the exposure of this industry and this investment, I fear, has reached broad levels potentially of the American economy. When we're talking about 40% of stock growth in the United States being attributed to these companies in the AI sector alone, and that sector has not turned a profit, we're talking about a massive economic bubble. And when we've seen, depending on the exposure of that bubble, we could see 2008 style threats to economic stability. And that pressure is reflected on the extreme lengths that these companies are going to allow unethical human interactions with these chatbots.
Like, what is that? I don't understand that. Like, so what unethical interactions with chatbots? Like,
yeah, I think she's critiquing the investment in data centers for things that to her are invaluable, aka like, Sam Altman says you can have an AI girlfriend, all that type of stuff. But it so misses the point. It's so, because as you said, you're implementing AI workloads in your hospital. I mean, that's stuff that could technically save lives if it makes the hospital.
It is already saving lives. Our time to our stroke times are down almost like 40-50%. Literally, it's one of the greatest things that ever happened. But whatever. Sorry.
Very myopic view that she has, and I think that's also a fear. Dude, me and Steve have been talking about this. There will be a politician that comes to power just by saying, I mean, Ro Khanna suggested it this week that we should have legislation that stops AI from taking your job. And so you're gonna have a variety of nuances.
Yeah, I agree with that. I think that there definitely needs to be some protection for workers from being completely replaced with like AI bots and all that stuff. But I mean, what I hate about what she said is basically, 40% of the stock, the gains this year in the market have basically been attributed to these companies and they're not turning a profit. I'm like, spoken like someone who's never, ever opened a business herself.
Yeah.
Dude, if you've ever, like anyone here in the chat, you guys know when you open a business, whether it's a lemonade stand or it's a gas station, any business, if you think that you're going to be instantly profitable the day you open, good luck. That is not how business works, especially when you're doing it from the ground up with a brand new industry.
Do you think that she is trying to find an argument to convince the American people that we should tax the Mag 7 a lot, like, and have it a specific AI tax? Do you think that's the angle?
I think she just sees a whole bunch of these guys with Trump and is like, okay, how do I attack these guys? You know, basically jimmy up fear. And this is the one thing that I posted on Twitter yesterday. I said, look, I like the fact that the Trump administration is very aligned with the tech sector, but I think the challenge that you run into is that it's still bad optics because these people are billionaires, right? So when you have people hurting, you know, in their personal lives, they don't care what the stock price of NVIDIA is. Yeah. You know, if you're someone struggling because you lost your job, you know, you can say like, oh, look, the economy's doing good. Look at the stock market. And, you know, to someone who has money in the stock market, you might, you know, be like, yeah, I'm in line with you. But the vast majority of people, especially at the bottom half of the spectrum, you know, the income and wealth spectrum, bro, they don't have that excess liquidity to buy stocks. They don't have that asset. They're living paycheck to paycheck, you know? So if you told someone at that level, like, hey, NVIDIA just did 20% this year, it really doesn't mean anything to them.
Well, let me ask you this question, because I've been hearing some people struggle with this mental model as well. I should have sold in October. How would you advise someone who's going through that mentality of looking at their portfolio, seeing the top of it, being like, man, I should have sold?
I should have sold in March. I should have sold, you know, February of 2000. I should have sold February of 2020. I mean, markets go up over a long period of time. So if you got caught up in the downward move, just unless, and this is where you really have to take your own personal life into consideration. I mean, if you get to the age where you're 50 years old, you should be in mostly risk off stuff, you know? The challenge is when people are like in their 50s and 60s and they're like, yeah, I still want to get that double-digit equity like return. That's when problems start. Time is the most valuable thing an investor has because you can wait out the storm. The challenge is when you're old, the one thing you don't have is time, right? So that's where I would say this is where everyone here in the chat, you have to be very responsible what you're going to be doing in your personal life. So if you're in your 50s and 60s, you shouldn't have been in this market so hard anyway. You know, you should have been a lot more like, you know, you want to do that 80-20 portfolio. If you're in your 60s, you kind of want to dial it back down. If you're young, Amit, for you, bro, you should be like 80-90% equities most of the time. Now, there are periods of time where valuations, if they get really high up there, that may not be a bad idea to, you know, to be a little bit more defensive, right? But that's because like you're an active participant in the market. If you're one of those hands-off people, then just chill. Robinhood should take away the sell button. You know what? I had to just stop that's what I did today. I stopped the notifications from Robinhood. I was like, bro, you don't need to keep reminding me that crypto's down 5%, crypto's down 10%, crypto's down. Like, stop. Just, you don't need to do that.
You know? Yeah, and I woke up and everything's up 5% in the middle of the day. It's just, but no, look, I agree. And regardless of age, I think everyone has to have their own person. I mean, if you have kids, you don't have kids, but there's so many nuances to it. But I think generally, if you look back to October and be like, man, I should have sold, like, this is why the markets are tough. Because, yeah, of course, right? Like, as you said, in March before the liberation. But this is also what makes a career as an investor of how do you stomach these situations? How do you navigate these situations? How do you act as a person during these situations? You know, are you going to be a dick? Are you going to be pissed off? Are you going to be mad at your significant other because your portfolios? Are you going to let that enter into your personal life? Or are you going to be a responsible adult, realize, yeah, I should have sold. I didn't. It is what it is. I have conviction in these companies. I'm going to ride it out and not let that affect the other parts of your lives. Because if the market ends up affecting your personal relationships, like if you can't enjoy things, I know I joke about enjoying Thanksgiving, but if you can't enjoy a meal with family because you're down on the portfolio, it's something that everyone has to mature and be able to navigate over time.
Yeah, I mean, and not to mention the more drawdowns you see in your life, the easier it is to swallow them. So it's okay. Like for someone who, if you're in your 18, 19, 20, like let's say early 20s and you're seeing your portfolio draw down 20%, bro, you're going to see that way more often than you think. The question is, do you have enough balls to hold through those 20% drawdowns? Because at the end of the tunnel is usually a 40, 50% rise, right? Yeah. Just like I said, look at what happened with Liberation Day. If you sold out in April and said, I'm going away, you missed a 40% run up, So I think it's a very similar thing. I think we're getting to the point where we are eventually going to get to capitulation zone. I can't say for certain when that's going to actually happen, but I do feel like we're getting somewhat close. Do I think that this AI bubble narrative is going to bring the market to its knees like it did in the year 2000? No, probably not. I think people who are investing in a lot of these companies, they'll be fine. I think there's could be some choppiness throughout the rest of this year. But yeah, I mean, not to mention, guys, we're probably going to get the most dovish shares ever, dude. I'm talking about, you're probably going to see this.
No, this is going to be our next Fed, bro. This is going to be the next Fed chair.
Is it the ponytail dude?
No. This is literally going to be the next chair of the Fed.
Zavros?
That is, we're 100 basis points down day one.
Like, it's going to be like, we're too tight, we're too tight.
Dude, if the markets suck for the next 6 months, if we can just stay solvent and survive, we know those rate cuts are coming. And when they come, you would imagine the market's going to get ready.
Bro, Stephen Moran came in the first meeting. Everyone's like, hey, should we cut 25? Should we, keep it the same? He's like, nah, we're going to lower it 50. I was like, bro, what the hell? It's like, bro, this is your first meeting and you're already like, yo, go 50? This guy doesn't even stop. It'll be curious to see what he does again. You'll probably see the breakdown be like steady, 25% rate cut, 100% rate cut. And you're like, you won't even they do it anonymously, but you know exactly where Stephen Moran is. He's the one that's always like cut hard.
Negative rates.
Negative rates. Shit, we'll start paying you. Go ahead, go borrow that money.
Oh my gosh.
All right, brother. Well, you have a good one, man. Good
time.
Right,
Chris. I appreciate you. Chris's Twitter. At the end of the day, all you got is community, right? So appreciate you, man. Thanks for
hold on to each other. If you need to borrow money, remember Ahmed did really well on Robinhood, so just call him. All right. Later, guys. Have a good one. Bye.
Later. Oh boy, what a day, bro. What a freaking day. A week before Thanksgiving, literally a week before Thanksgiving. Bitcoin trying to get a little bit of movement. Everything else, though, Bitcoin's the only thing that's kind of holding on after hours. Everything else, Nebius, $80, Hoodie, 103, Nvidia, 178, Google, 287, S&P down another 0.1, Grabs down another 1.2%. Why not? PayPal down even more, of course. It's not like PayPal can get any lower. Nope, it can. Walmart's down a little bit. Amazon's down. Microsoft. I mean, just the after hours, it's almost like these algos or whoever's selling or buying, they don't care. They would like to continue de-risking, de-leveraging, and you're seeing that pain after hours. Right. That's also, at some point you sit down and you just look at your portfolio and you laugh, right? You laugh because you're like, wow, if this is that, if it's going to be this dramatic of a sell-off to the point where even after hours you're not getting any relief when there's no volume, then okay, I guess this is what the market's trying to do. The number one point that Chris made, I think, was at the end, which is that these are the only markets that are investable. I mean, like, yes, there's other markets that will attract capital, but the United States, when you're talking about growth, technology, actual returns, like, these are the stocks that are going to attract capital. And if they get to really, really disgusting multiples, like if SoFi gets below 20 or something like that, like the capital will find these names because they will continue to grow unless we get into a recession, which, yeah, that's possible. And maybe there's some dynamics of how the Fed is thinking of rate cuts and the labor market, et cetera. But absent that, these companies are going to grow. And their valuations are going to get cheaper if they grow, which means they're going to become much more attractive. So it's ugly, dude. It is absolutely ugly. But we all have to navigate it right here. Rizar, thank you for the super chat. Q3 2025, 82% of S&P 500 companies that have reported results beat analyst earnings estimates. Yeah, about 80% of them beat by an average of almost 9 to 10%. So, I mean, the earnings are not the mistake. I mean, look, here's the other thing. That, you know, this question of just like, hey, I should have sold in October, right? Like in October, remember what was happening? Companies were beating. Jensen was at GTC describing a $500 billion opportunity. The government was shut down, right? So if you thought, oh, I should have sold because I should have seen the labor market destroy, it's like, well, you don't have the data, so you got to give yourself a little bit of grace right there because the government entirely was shut down. And the equity markets were being incredibly resilient. By the way, in October, we had a drawdown. We had a $20 billion crypto liquidation. That ended up being a buy the dip. So once again, the market's conditioned people, especially retail, to believe that buying the dip gets rewarded. And it's really tough if you've been buying the dip all year. I mean, it's just human nature, right? Whether it's right or wrong, it's been seen as right over the past 4 to 5 major dips we've had over the past year and a half. You have been rewarded. Yen carry trade, Liberation Day, October 10th. There's a dip, you buy, you get rewarded. It's really tough to look back on yourself and say, oh man, I should have seen it coming in October. Because the next time we get to a local top, you're probably not going to see it again either. I mean, maybe you do, but most people don't. It's not even the Bill Ackmans of the world or the Buffetts of the world. So, I mean, from that perspective, it's like, I don't think you can beat yourself up too much over not selling at the highs. But it's also a question of, do you believe the company? Now, if you're in some random nuclear quantum thing that you don't think is ever coming back, that's a lot tougher to hold than a Robinhood or a Palantir or a Mercado Libre or something, right? Like if you really don't think this stock is, if you don't think Oklo is ever getting back to 195, then it's like, that's a different question. But if you think Amazon will eventually be back to 245 if you bought it after earnings, and you know right now it's at 219, it's much easier to hold. Much easier to hold. Yeah, and you know, we talked about it in the morning as well. I mean, you had exit liquidity in the morning. If you really felt that, you know, you're starting to get nervous about the markets, trimming a little bit on days like today in the morning. I did, you know, when I said that I didn't actually think we would get the worst reversal we've seen in over a year. It's kind of just a gut feeling of like, all right, market's giving people an opportunity for people that really do want to get the hell out because they're just feeling nervous. But again, it was so green, like so green. It's hard to even take that seriously because you're like, no, NVIDIA crushed earnings. We are back to doing what we have to do. And then the Fed started talking. And as a result of the Fed started talking, or as a result of that Fed speak, you know, you had this lack of a rate cut narrative, and then we end up getting hit more. Or there's more than that. I'm blaming it on the Fed not cutting rates, but in my gut, I think there's something else going on. I don't know what it is. No, I did not buy anything today, for those asking. I did not buy the dip. I just saw my portfolio. I mean, this was not a day. I said this on Tanner stream. It's like in the chat, I was just like, everything feels like a falling knife. Everything. And I'm not the biggest TA expert, but I mean, based on the after hours action, everything was a falling knife today. So just looking at these charts from the little TA I have, I was just like, no, this doesn't look like it's rebounding. Doesn't look like there's any bounce. It just looks like it keeps going down. It kept going down. And I really didn't expect that. I thought I would regret not buying today. But no, I bought on Monday. And today just continued getting hit. So it's ugly. Bitcoin's just playing with my heart right now. Yeah, Bitcoin's actually making a little bit of a move here. 88, everything else is getting hit. It's a I was talking to my cousin. She has a relatively smaller portfolio, but you know, she's been getting hit as well. And she's coming over for Thanksgiving next week. And I was saying, dude, we were going to celebrate Thanksgiving, have some fun. Now we can eat some food and cry together. We can do that together. So, but no, this is one of the first times she's seen also like a really big. I mean, she saw April Liberation Day, but she wasn't as invested. Today was like an ugly day for her as well. So across the board. Across the board, it has been really, taking a toll on people. But again, I also agree with Chris, which is like, it just feels more like we're near some level of capitulation. Now, maybe we're not. Maybe NVIDIA needs to go back to 110. Maybe. But it also feels ugly to imagine that's the case. The other thing that's really ugly here is the derivative play. So like a MicroStrategy, again, I think the argument that Tom Lee made about, hey, MSTR is going to be the core argument that is shorted, or the core stock that is shorted, in order to feed liquidity concerns for these hedge funds that are market making because they're down on their crypto and they're having some systemic glitch that they need to get out of. I mean, obviously that is something that we have to keep an eye on, but the fact that he's saying that stocks and their option chains are being used as a mechanism to be able to cover the shorts that these hedge funds need to engage in, it's disgusting. Yeah, Hood down 10% today. I mean, down $13 when you look at the after hours gain, after hours loss, and today. How much are you down over the past couple weeks? It's about $500,000 on my portfolio. It's about $500,000 across the portfolio, which is ugly. It's obviously very ugly. I mean, I think I told you guys like last week on Thursday, it was down 184 that day, and then we recovered. No, it was probably Tuesday. And then Wednesday got hit, then Thursday went up, then Friday we got hit, but then Friday it reversed and it was almost break even. And then Monday got hit, Tuesday a little recovery, and then obviously Wednesday got destroyed, after hours recovery, and then today nuked again. So, for some of you guys, it might be much more than $500,000. For those working with a lot more money, for some of you guys, it might be 20,000, and that might be a ton of money. But I think for all of us, it is, it's unless you sold at the top, which I did not, or you are not in anything high beta, which there's no way, anyone would have the types of returns that we had this year if you were not in something high beta. Whether it's 500,000 or 50,000, or the proportional level compared to the type of risk you are taking has to be aggressive. I mean, the S&P down 4%. Obviously, the high beta names, even the AMD. When AMD is not the most high beta in the world, right? Like AMD is not as high beta as Oklo, but AMD was just, people are buying it at 265. AMD is at 203 right now. So let's say you bought it at 235 instead of 265 because you thought that was a dip from 265. I mean, you're down another $30. That's ugly, right? So it's like, if you're in anything that gave you the growth, that gave you the up $500,000 in like 2 months, well, that'll give you the down $500,000 just as quick, if not quicker. So I think the broader question here is like, where does this go? And again, look at it, I recognize it's even a privilege to be like, oh, you're down $500,000, right? Like, it's just like, because at the end of the day, that's paper money. That's money that was potentially profit, but it's not. That's not like an actual $500,000 that you're losing out of your personal cash, because technically that's part of the gains that you had for the year. So it's like, it's disgusting. But going back to what Chris said, it can also come back. Now, maybe it doesn't come back overnight. We are more used to this stuff coming back very quickly, sometimes intraday, given all the V-shapes that we've seen throughout the past year. But it's in the companies that I believe in. It's in the NVIDIAs of the world, the Hoods of the world, the Palanters of the world, the Amazons of the world, the Metas of the world. Like when you're in those types of names, I mean, I think the two most speculative names in my portfolio, the three most speculative names in my portfolio are Grab, BMNR, and Nebius. Which maybe all three of those go to zero. I don't think that's the case, but like the far majority of the portfolio is in the stuff that I believe 10 years from now, I'll be happy that I held onto these stocks. And I think that's the only thing you can hang your hat on when shit like this happens. But nonetheless, it is ugly. What about Oracle? I mean, Oracle, I don't know if anyone can touch Oracle right now. Like, their credit default swaps are, look, if Oracle gets to a certain price level, I think it gets attractive. But like, the reason this one's been getting hit is because this is the poster child for debt-fueled, debt-fueled growth. And so like this, I just narrative wise, I would not be in that one. Menard does have earnings tomorrow morning. I don't know if we're going to get anything new from them. But I mean, even Palantir, dude. Like again, Palantir and Hood, I've been buying from the single digits for a long time. So a day like today where Palantir falls, what, like $14, Hood falls $15. Those are huge drawdowns on my personal portfolio, just because those have been the cornerstones of my portfolio for a long time. And so, but also they've also created the majority of the gains that I've had for a long time. So it's like you got to be able to navigate and mentally handle those type of drawdowns if you are deep into those names. NVIDIA has actually been holding up the best, to be honest. I mean, NVIDIA, I know it's at 180, but like you would think with an epic collapse, NVIDIA is going to 150, and like it's not there yet. Maybe that ends up happening. I do think NVIDIA will get stupid cheap anywhere near. I mean, Steve ran through the numbers this morning. Like, I don't think we are all crazy, guys, when we look at NVIDIA's multiple and say, oh, analysts expect 870 of EPS in 2027, trades at 21 times earnings. Oh my goodness, that's expensive. Like, none of us are like, it's not like we are not a YouTube channel from 2021 that was trying to justify continuing to buy the dip on GameStop. Like, that's not the community that we built. Got a lot of smart people in this community. Matt Money, Chris, Steve, Dougie, all these people that come onto the show, look at the actual numbers, are not just trading based off vibes. You know, this is not like AMC, the apes. It's like, no, they're like, we're looking at earnings estimates and be like, this is not expensive. This is not some scary thing where it's like the end of the world, unless the whole AI thing is fake. It's like, okay, maybe that is, none of us know, but from the best of our ability, we're trying to rationalize that is not true. Yes, Matt is full port GameStop. So no, but I saw something. Dude, the thing about starting a channel in a super bull market is that it's temporary, right? I saw a lot of these channels in 2021 that started on the COVID pandemic run, and they're all like, almost all of them are gone. There's like 3 or 4 left. The majority of them that tried to make a name for themselves during that time, they did not have the stomach to deal with the bear market. They did not have the consistency to be present when things were going against them. And then at its core, their stocks didn't work. Like GameStop and AMC did not work. I would imagine a lot of the names that we've talked about over the past few years are legitimate companies, even if they experience drawdowns, which is inevitable. I mean, look at Tesla, right? I would say Tesla's a pretty legit company, even though it's experienced drawdowns. You know, that is where you get your longevity. And also, I started building my channel in the depths of the bear market of 22. So I kind of started building every day, waking up to red, and it definitely humbles you. Then we had an amazing bull run, and hopefully that bull run continues. But even if it doesn't, the question is, did you pick a GameStop in 2022? It's like, no, we picked a Palantir, we picked a Robinhood, we picked an NVIDIA, you picked a SoFi, you picked a Rocket Lab, you picked companies that are legitimate and that will continue to grow. So now we just have to see where it plays out. Yeah, I agree. Now's the time to really do some deep dives. You got to start really looking for value in these watchlist names. Again, I think all the Mag 7, obviously Meta, Amazon, Google, probably not, because that one is up a lot year to date, but Meta and Amazon, I do think a year from now, we're going to look at it and think that they're going to be good names. And that's important. Is it time to buy Hood? It really depends on, I said this in the morning, but do you think crypto gets hit next year? I don't know. I really don't. But I can confidently say, as someone who understands Robinhood, if Bitcoin goes down to like 50,000 or something, Robinhood's not going to love that. Robinhood will survive as a company. They're not going to deteriorate like these digital asset treasuries that are levered against Bitcoin. They will survive. They just might not thrive. And so if they're not going to thrive as easily, then no, maybe it's not the best buy right now. Granted, I think if we have, Robinhood's also a proxy in the bull market. So if the bull market continues, NVIDIA keeps doing well, the AI trade does well, crypto kind of stabilizes, then yeah, Robinhood at 101, growing at 40% a year is stupid. But a lot of this is contingent on external variables that we just don't have answers for. This is the bottom half of that Tom Lee interview where he goes a little bit more deeper into this algorithm that's selling. So we can finish listening to this.
I think we are in a washout period in an overall bull market.
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now, because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today.
This is the kind of stuff, Tom. It's one of the.
That's kind of the extent of his analysis. I don't know, guys. Maybe this glitch thing makes sense. I heard a lot of takes after Tom Lee made these arguments, and people said he's just coping, and we've topped, unfortunately. And this is a what do you call it? This is essentially a denial phase that he's in. That he's not, he's denying that he's wrong because it's some glitch, but he might actually be wrong. I don't know. I really don't know, but we are going to find out together if it ends up being like that. I mean, if there was that much leverage in the system through these glitches where it needed to now get liquidated, you would imagine we bottomed here, but it'll take time to see. Doug says if crypto drops, HOOD price will come down, but Vlad's going to keep grinding 1,000%. This is why I have my Robinhood position. Like at the end of the day, and I feel like I was pretty transparent about this when Robinhood got to 150. I mean, you guys, if you even remember the day it got to 150, there was excitement in my voice and there was also nervousness because I was like, even with Tanner, we were talking about it on our Tech Bros, but we were just like, this is a lot, bro. And like, we're really happy that people are getting these gains, but this is a lot. And we don't think it's natural. And so if we come back down to 85, which would suck, and we're not that far away from it, do I sell because I want to protect whatever gains I have, or do I continue to hold because I think Vlad's going to keep executing? It's like, well, I know Vlad's going to keep executing. I know that's for like the one thing I can say confidently about Robinhood is in a bear market, Vlad's not going to care. He will keep working. And he will not give a shit about the stock price. He will make sure that the company keeps executing so that when things turn around, they will be in a prime position. And so this is what you have to live with. If you're going to have a stock go from 30 to 150 or 7 to 150 in 2 years, like, yeah, you're going to see moments where they're not 150 anymore. They take a hit. I can't say the same about Webull. For those talking about Webull, like I don't have the same type of confidence in Webull's execution. Now, if you do, that's fine. If you like the valuation that Webull's at, that's fine. And I know they had a good earnings today, but I cannot hold on to Webull. Remember, Webull went to $83 when they IPO'd, bro. There are bag holders from 50, 60, 70. That thing's at $8 right now. So I personally, it goes back to what Chris is saying. Can you hold on to a name when shit hits the fan? And with Robinhood, it's very easy for me to hold on to that name. Davis says I'm glazing. Well, Davis, your Wall Street Journal cover right here, which, by the way, take a look at who's in the background of that Wall Street Journal cover. Not only is it legend, there's someone else right there. Your post right here ended up getting a comment from someone that I would imagine you've been glazing as well. So there you go, Mr. Vlad Tenev. Congrats, Davis. Great setup. Vlad's gonna keep working. Vlad's gonna keep working. This is actually a good piece. This was a Wall Street Journal piece on retail investors. I think they have another one coming out as well about how retail investors are just navigating the markets. And so you got our boy Davis right here that got included in it. But yeah, I know Palantir is going to keep working. I know Vlad's going to keep working. I know Karp's going to keep working. I know Elon, Jensen, all these guys are going to keep working. And quite frankly, you know, when shit hits the fan, they will be more motivated to prove that they can win, which is why it's going to be exciting. Spencer, thank you for the super chat. Here's for your rent fund. Guys, I didn't move out just to move back in with my parents when the market collapsed. Obviously, I'm going to be okay. But next week, if you see me back at my parents' house, just realize it's an extended vacation. And sometimes your boy misses home. And so if you see a different background, it's not really, it's not me giving up on living on my own. It's just, you know, sometimes you miss your fam. So just have to be a little cognizant of a different background. You know, if you see the exact same background as last time, or at least for the past 2.5 years when I was at my parents' house, again, sometimes you want to have an extended vacation with the nostalgia of the previous setup, even if your old room is deconstructed. So, you know, that's all. That's no, in all reality, I know people joke about this stuff, but I'll be okay. I'll be okay. I moved out understanding quite frankly, I moved. So to live in the place I'm living in, you have to give your taxes, your net worth. You have to like prove you can afford to live here. My portfolio was significantly lower than what it was today when I even got approved to rent out this place. So, I mean, I think we'll be okay. I think we should be all right. And, you know, I took a bet on myself back then, continue to take a bet on myself, but just financially, I've done the math many, many times on, you know, can I afford to move out? And I've taken into account, hey, like, what if the portfolio is looking like this, looking like that? It's like, we should be all right. We should be all right. But again, if you want to have an extended vacation with the family, it's not a bad thing. So just realize if we're back home, it's just an extended vacation. That's all. That's all it is. Oh boy. Ugly, ugly, ugly. So freaking ugly. Is there a call sheet if a MIP moves out? Oh my gosh. That's hilarious. That is hilarious. Yes, AMD's down after hours, Grab's down after hours, MicroStrategy's down, SoFi's down. I wouldn't take any specific name being down too seriously. Everything is down. So for anyone saying, look at this stock, it's like everything's down. Like, and there's no point of being toxic and being like, well, people should have sold at this price. It's like, dude, like, yeah, everyone should have sold on October 6th. Not a lot of people did. So it's like, yes, everything is down. Some names are down more than others, but pointing out that Duolingo should have been sold at 300 versus 160. It's like, yeah, Oracle should have been sold at 350. It's like, if everything was mooning and there was like one or two stocks that were really getting hit, we'd be looking at those one or two stocks. That is not the case. This is a bloodbath across the entire market, everything. Which is why Chris said, and why Doug is reiterating right here, this is when you buy your favorite stocks. If you are going to buy something, this is when you buy your favorite stocks. because everything's on discount. Now, again, if we get a 2022 type of year next year, then everything is going to keep being on discount, but it's not like anything is hit that much worse than everything else. I mean, the fact that NVIDIA went from almost 200 this morning to 178 right now is very, very ugly across the board. Gold is up. Was gold up today? Actually, you know, Ray Dalio, yeah, gold's basically unchanged. Ray Dalio continues to be so excited about gold right here. Gold 4,077. I think one thing that this experience will teach people, and I think this is, you know, something I had to deal with years ago, and I've noticed just based on the DMs I get with screenshots and stuff. And you know, do you guys remember in October? I think a lot of you guys remember this. There was a couple of market opens where I was going on these rants about Oklo. I think the majority of you guys remember this. Like, it was like 25-minute rants. It was to the point where some people got mad that I kept talking about it. But and it was about quantum. My core argument was like, these stocks are really stupid. Like, let's just be honest about it. And they don't deserve their multiples. And the screenshots I've been seeing are people levering up weekly calls on these stocks. If anything, I think this experience is going to tell people, like, you just can't do that. You can't get away with it. You cannot get away with buying weekly Oklo contracts. Like, it might work for a little bit, but eventually you get hit, and you get hit bad. And you can't just assume that the names are going to go up forever. And so, you know, we got a new generation of investors, which, by the way, years ago, I was one of those people that thought you could do that stuff. I got burned, and I never buy weekly The most I engage in the options market is either selling the volatility, which is generating a premium. And the worst case that happens is there's an opportunity cost if the stock, you know, outruns me, or leaps. And I give myself time for the thesis to play out. But the amount of investment, I mean, we saw it in the data as well, right? Like on October 10th, 61 million calls were bought and 42 million puts were bought. It was the craziest ratio on a day where the S&P 500 was down more than 3%, which is what we had on October 10th. Everyone bought the dip and they bought calls. And if they bought calls for, guess what, November 10th, 1 month out, shit didn't work. So it's like, I think if anything, this was a lesson to a lot of people that you just cannot be as degenerate as you were trying to be. And I think, you know, we all know someone, or we all have seen screenshots on Twitter or something where people were just being straight degen. Like, straight up, this stock's going to go up 10% next week. I'm buying a call option. And obviously a month later, that didn't work. My regret is I didn't go long the inverse ETFs on quantum, dude. For all the ranting I did on quantum, my regret is I did not go long the freaking inverse ETFs on quantum. I was looking at them seriously. I was like, dude, if this thing just drops 10%, this thing's going to go up almost 40%. Like, there's no, like, I didn't do it. I was thinking of it as a 2026 hedge. I didn't expect the last 2 months of 2025 to suck, which we still got a month left, so maybe things change. But as the one regret I had there. And so I guess my lesson to learn from that is, hey, sometimes when you think I should hedge, it's okay to like take a bit of a hedge. And take it, especially when you're feeling those vibes of like I think here's my takeaway from this: when you're feeling like you don't want to buy the dip or buy into strength. So when Hood gets to 150, I'm not buying. When Hood goes to 130 from 150, I'm still not buying. Okay, maybe then I should start thinking of seriously initiating some hedges. Because if you're not buying the dip and you're not buying into strength, then you obviously are thinking there's something wonky going on. And losing a couple thousand on a hedge, or a couple hundred, or a couple 100,000 based on the size of your portfolio is better than obviously not having any hedge. So I think that's kind of my takeaway from it. Do we have the futures opening? Oh shit, we do have the futures opening in about 1 minute. Well, we know they're going to be red. We know they're all going to be red. Yeah, Doug, you know, his UVIX hedge worked out great. It was something he's been talking about in the chat for a while. All these things are a lot of different experiences for people to navigate on. But at the end of the day, if you're in the right names and you're not over levered, you're going to be okay. Like, yeah, you feel more poor than you did a month ago, but you're going to be okay. Like realistically, what's a scenario where you're not okay? Okay, you bought Robinhood at 120, it's at 101. Like, yeah, you don't feel rich because it's not at 150 anymore, but are you not going to be okay? You bought Amazon at 250 on the rip. It's now at 219. Are you like, now you bought Ookla at 195? Yeah, you might not be okay. And like that, you just got to swallow the bullet and be like, all right, I messed up there. But like for the far majority of people, I think we're going to be all right. Now, BMNR, I will openly admit, I don't know what the hell is going to happen to that one, just because I don't know if crypto's topped or not. If it has, then that one's probably going to have more pain. So that one, I don't know. But again, BMNR was always speculative. It's not a meta that you can sleep well at night on. So when you take those types of high risks, you also have to deal with the potential pain of those risks. All right, futures are open. S&P is slightly up. Let me get the exact futures. Are we kind of green? Very little, like very little bounce. I mean, nothing real, nothing like seriously real. Those are your futures. Small caps flat, tech flat, S&P up, Dow Jones up a little bit. I mean, it would be funny if today was like the legit bottom and the rest of the year was going to be amazing, but I think we'll find out over the coming days. Tomorrow is Friday, which does suck because, you know, Friday is usually a day where people tend to sell going into the weekend. We also next week we have a lot. We're not going to have a lot of volume next week, dude. So I'm not going to be live on Friday because I'm going to be with my family. Even though the market is open on Friday till 1 p.m. So we have a early close on Friday, but I won't be live on Friday. Thanksgiving. So we only have Monday, Tuesday, Wednesday. And a lot of people are not going to be trading. They're going to be traveling. So there might not be a lot of movement next week, which would be hard to imagine some V-shape just because there's not a ton of people trading. But also, does that mean that things have to get sold off again next week? Like at some point, you think, I mean, dude, the S&P's up 11%. We go down another 3%. We're barely up 8% year to date. I mean, at what point does Donnie T come in and say, hey, that whole amazing stock market I promised everybody, maybe I need to do something to fix it. So I wonder how bad does it have to get before people think about it. Yeah, BMNR will have earnings tomorrow morning. Do a poll tomorrow, red or green? Okay, let's do the poll tomorrow. Red or green? Red or green as we go into tomorrow. Let's pull this up right here. Again, we did get the jobs report this morning. That jobs report also was better than expected for September, but September, not October. Yellow. Oh my gosh, dude. If we really get an ugly day tomorrow, it's just going to be like getting punched in the face. And the worst thing about this is I like, maybe I'm wrong, but I don't think this is because of AI bubble concerns. So everyone's like, Burry was right. I'm like, well, hold on, wait a second. Like, what was he right about? Because like, was this about the rate cut or was this about a yen carry trade? Because it damn sure doesn't feel like everyone woke up at 11 a.m. and was like, AI is a bubble. Like in what world does that make sense? Like, are the Asians waking up right now, looking at the market, seeing NVIDIA down, like, oh yeah, it's a bubble? It's like, I mean, they saw those earnings like we saw those earnings. Look, if NVIDIA had bad earnings, I would straight up say those earnings sucked. I would say, oh, guys, like maybe the multiple, like maybe like, I mean, unequivocally, those earnings were incredible. So it really feels more systemic. Couch says, I sold my couch. I am now a chair investor. Couch. We are getting nuked out here. Couch lost the couch. He's now on a chair. Tony, thank you for the super chat. Tom Lee said ETH bottom is 2,250. Do you agree with that? I don't know what to agree with anymore when it comes to his predictions. I'm sorry, guys. And I said this publicly. You guys saw the skepticism in my voice every time I heard him publicly say 200,000 Bitcoin, 9,000 Ethereum. Like, I just like, I love the guy, but I'm like, dude, that is fucking crazy. Like you're talking about a magnitude of, and people are willing to give you the benefit of the doubt because you're Tom Lee. Like that's why you get the benefit of the doubt. But your credibility starts to go down when you're so bullish on these things that seem so unbelievably impossible, and then they obviously don't happen. So, I mean, how do I know he's right about ETH 2,500? How can I agree on that? I'm not a technician to the extent that Mark Newton is, which might be giving him his advice. And then I don't know if he's even right about this crypto glitch stuff. Like maybe he is, maybe he's not. I just like, from a public figure perspective, I think I've always tried to be more conservative than not. In fact, a lot of people back when Palantir was running in 2024 got mad at me because they didn't think I was bullish enough. Because I was like, guys, it's pushing 100. Even I know I get a lot of shit for being like the Uber Palantir bull. But in 2024, if you were part of the show, and I know a lot of you guys are new here, but every time it went up, I was in India when it was hitting $40, and I was just like, this does not make sense. This is an $80 billion company doing like $3 billion in revenue. This does not make sense to me. Like, am I excited? Of course I'm excited because this is the name I've been covering for 2.5 years. Like, this is like the moment. But also valuation-wise, I don't get. And at some point, I had to accept, all right, Palantir is defying the odds of how you think about valuation. And you have to sort of be humbled and understand it from a different perspective. But I was never the guy saying Palantir to 500, Palantir to 200, Palantir to 300. That was never in the thumbnails. I was never the guy saying Robinhood to 150. I mean, in 2024, I barely had a $25 price target on Hood. So it's like, I've always tried to underpromise, overdeliver because I know your credibility gets hit when you get super, super excited about something. So if Tom says 2,500 ETH is bottom, like what if it's not? Because obviously everything else has. I mean, he said it was the bottom 2 days ago. Last week he said it was the bottom. Like at some point, people stopped listening. And unfortunately, this is what happened with Cathie Wood. Cathie Wood lost a lot of her credit. Like, let's just be honest about it. Let's call a spade a spade. Cathie Wood lost most of her credibility because of the stupid target. When she said Zoom would go to $1,500, Zoom is at $78. Forget the target. It's Zoom. It's not Zoom into 1,500. So when these prices, sometimes you hear this shit and you're like, oh, I can't listen to that person because they're doing this for entertainment. They're not serious about it, or they're doing this to raise money or something that's just not real. And my hope, and I genuinely say this, I do not want Tom Lee to turn into that type of caricature because I love Tom. Like, I really do respect him so deeply. And I think people know how much respect I have for him. But I mean, another example, this Orb shit with Dan Ives, the day it came out, a lot of people have said, why haven't I bought? I've gotten so many DMs. Why aren't you buying this? Why aren't you tweeting about this? Because the fuck is Orbs? What is this WorldCoin nonsense, dude? Like, what? Like, that was one of the first times I was just like, dude, what is he doing here? Really? What, an investment into Sam Altman's biometric scale? Like, what? Dan Ives, Dan Ives, I love him, but Dan Ives can't really talk about much other than it's a party that, we got to keep playing in. Like, he doesn't go deep on his analysis. We all know this. Dan Ives is great to listen to, but he does not go super intricate. He's going to go super intricate on biometric scanning in the crypto universe. What? And then BMNR is investing in that as a moonshot. It's like, okay, I get it's a moonshot. So if it goes to zero, whatever, it's $20 million. Who cares? But it was the first thing where I was just like, what is Tom doing? Like, what is going on? And so I really hope in the bottom of my heart that he does not get characterized as a Cathie Wood type of figure. But when you throw out this type of, short-term price targets, this is the bottom, this is the top, yada, yada. This is the price target it's going to get to in 2 months, less than 2 months. You just lose credibility. And at some point, people stop listening. They don't care. And so we're going to see over the long term how that plays out. Yes, future is still flat for those that are asking. Future, let me pull it up right here. Futures are still flat. I mean, we're not getting a really big, meaningful move here. Actually, NASDAQ No. Well, it's not green anymore, but it's also not super red. Well, now it just went red. VIX is up. You got the VIX going green. There you go. This is where Joseph Carlson stocks rock except for Duolingo. I think Joseph's getting too much shit for Duolingo, dude. Like, I've been seeing a lot of nasty comments against him. I'm like, dude, at the end of the day, you guys got to recognize we're all just human beings. Like, we're all just humans at the end of the day. Like, we are all putting out our due diligence. Some of us have very bad intentions. They want to get you into a private Discord and charge you $500 a month and blah, blah, blah. Like, some of us have those intentions, and those people are out there. And I've, made sure to the best of my ability to never become that. But other people like Joseph Carlson, he's not trying to hurt you or scam you. Or at the worst, he's selling a $10 subscription to his software per month, like that. He's just having a presentation of ideas. Some of those ideas will work, some of those ideas will not work. Same thing with me with Grab. I mean, Grab is up like 8% now year to date. At the highs, it was up 30%. Duolingo, unfortunately, since Joseph Carlson is down almost 50%. So we're all going to have some losers. It is what it is. It's going to happen. And, over the long term, I don't know if Grab ends up being a loser, even if it's a loser in the short term. Over the long term, I don't know if Duolingo has to be a loser. But I think people are getting a little too aggressive at him for that stock, going down from 300 when he started talking about it. He's not perfect. He's just a human being. So am I. Some names are going to work. Some names are not going to work. I mean, Netflix, he called at 100 and wrote it down from 700 to 100. Now it's at 1100. So the presentation, and the only thing that I can do or Carlson can do or any other YouTuber can do after they recommend a name is ask themselves what went wrong in that name if the name actually does end up collapsing, and how can I change to be better in the next name. But if you're going to play this game and you're going to call names publicly, some you're going to get wrong, some you're going to get right. But I'm not here saying Grab to 100. He's not here saying Duolingo to 1,000 like a Kathy Wood. And that's where you lose your credibility. People can handle you being wrong a little bit. People cannot handle you being manipulative in the process of also being wrong. That's when people really say, I can't trust this person. And I think that's the difference here. Richard, thanks for the super chat. Just woke up. Is it euphoria? I would not say we are in a euphoric part of the market. S&P down again after hours, 651.42. But maybe the market still has lower to go. This is worse than April, unfortunately, because there's no reason behind it. It's just BS drama and uncertainty. Yeah, and this is the mystery puzzle piece. Is there something more to this sell-off that we don't all know about? Is it not yen carry trade? Is it not freaking the Fed cuts? Is it not the AI bubble? Is there some shit under the hood that's happening that we don't know about, but it eventually will be exposed to everybody? And when it is, it might be too late. I don't know. Is it really the Fed didn't cut rates? Is it really yen carry trade? Again, if I gun to my head, I would say it's the rate cut scenario, because as soon as the Fed started talking this morning at 11 a.m., that's when we kind of saw the pivot. But then again, the velocity of the sell-off just feels like it was more manufactured than anything. And then it makes you think deeply of is Trump going to allow a recession in this country? We know Trump's ego. We know how much credit Trump wants for it. Is he going to allow us to have a recession? I mean, last time we had a recession under Trump's term was freaking COVID, where he has a pretty easy excuse. We have a global pandemic. It is what it is. We end up in a recession. This time, what would be the excuse? I mean, you know what's going to happen. I'll tell you right now what's going to happen. If we actually do end up getting to a recession, stock market sells off, the number one thing that's going to happen is everyone's going to go back to one word that caused all of this, caused the inflation crisis, caused the cost of affordability crisis, caused the fear and the panic because of earnings growth potentially going down. Tariffs. It will all go back to tariffs. Not to mention we got the Supreme Court tariff coming up soon in terms of their decision. But that concept of staking the entire second term on this policy objective that had economic implications, if that goes against it and we end up in a recession because of that, I mean, I don't know how he's going to handle it. Because who is he going to be able to blame? You can only scream it's Biden's market for so long before people start being like, oh, no, you caused this. I'm voting for the other party. And then if you're a lame duck president, you can't do anything for the last 2 years. Like, so I think there is a trajectory in which that happens. I also think there's a trajectory where Trump says, I'm going to make sure that doesn't happen. And so I'm going to have to fix this shit before it gets that bad. And, that's where he might come in and try to save the day in whatever way he does, which might even require reducing the tariffs, which he already talked about. And so if that happens, that might change things as well. Future's still red. Bitcoin's still red. No, Bitcoin's actually, no, Bitcoin's red. 87.5. Did anyone buy the dip? Put in the chat, what did you buy the dip on? I didn't even ask this question. What did you buy the dip on if you did buy the dip? Amit, are you going to visit your dentist tonight? No, I'm not. Actually, I thought I had to, when I went to see the dentist, I thought I would have to pay for it, but it was just a checkup. And so I didn't have to pay any. It was actually really quick, dude. It was just like 10 minutes. It was actually like everything was fine. And then I just left. So yeah, I didn't have to pay for anything extra and it was good to go. We shouldn't have to go to the dentist, hopefully, for a while. But I will not be going there tonight. Uber, Amazon, Hood, Grab, VG, Upstart, MicroStrategy, Amazon. Someone said a quickie. Oh my goodness, dude. Rocket Lab. Made it safe to drink Saratoga at this point. Yeah, maybe Saratoga has the opposite effect, dude. Maybe that's what we got to do. Dude, when I started buying all those damn candles, I think it's the candles, guys. Even though my apartment smells great, bro. My apartment smells phenomenal. Like those candles, dude. Every morning, they just smell great. SoFi, TeraWulf, Micron. Dude, Micron even, I think there was some downgrade on but Micron was just going nuclear over the past couple of weeks. Yeah, why is Uber at 80? Like Uber's trading at 17 times earnings. I love the Robotaxi and Waymo, but that's not stopping Uber anytime soon. Like a lot of this stuff, it just feels dumb. BM&R, Oscar Hymns, ASST. Is this thing finally under $1? Because, you would imagine, yeah, okay, 98 cents. This thing is leveraged against Bitcoin. So, Nebius, Rocket Lab, SanDisk. I don't know why SanDisk was up 400%. This one, I like props to anyone who just shorted the hell out of it. Like, I don't know why it was up as much as it was up. But yeah, it makes sense that this one took it. And this one's a legit company. It's just at some point, the price also kind of did not have a lot going for it. And it's still up 400%, 440% after this drawdown. So Cold said, ASTS, Oscar were my buys today. I'm going out to buy ramen noodles. Dude, okay, so here's the question. On a day like today, when shit hits the fan, do you like how do you guys individually cope? Like, do you order DoorDash? Do you like go get some good food? Do you like some comfort food? Do you think, well, I'm losing so much money, I might as well lose some more money and order some Uber Eats? Do you just like go to sleep for a while and forget about it? Because I think everyone has their own way to navigate it. Do you watch some Dawson's Creek, which I would recommend? Phenomenal show. Benny said I need a spliff. That is also one solution to navigate. Robinhood prediction markets. Davis says go on hikes. Sleep. Magusta says go for a run. Gym. Hard mocktails. See, I don't drink, so I don't know what it's like to like be upset with my life and then get a drink to like I've never had that like, oh, I need a drink. Like I don't know what it feels like to drink. I mean, I don't like, dude, honestly for me it's just like go to sleep, dude. Just like go back to bed. We all chat together. This makes me happy. Well, yes, I this is also this is something I enjoy as well, especially on days like this. Got to be here together when this shit happens. Buy more Ethereum. Can you check the most traded stocks today? Yeah, let's check. We haven't looked at this over the past week. So these were the top 20 traded stocks in the options market today. Wow. I think this is a record high for NVIDIA. 6 million options today. Tesla number 2, IBIT number 3, Palantir number 4, AMD number 5. Then you have Meta, Apple, MicroStrategy, Google, Amazon, Microsoft, SoFi, Hood, Netflix, Coinbase, Google, Micron, CoreWeave, Iran, and Boeing. That's pretty incredible. Still more, well, no more. I mean, look at the volume on put to call ratio. The ones that have over a 1 have more puts than calls. So Palantir had more puts than calls. AMD had more puts than calls. Microsoft, dude, I don't know why people are getting so bearish Microsoft. It's like they just don't believe Satya. Micron more puts than calls. Look at Boeing, bro. 298,000 puts, 80,000 calls. What about Tessie? A little bit more calls than puts on Tessie. But still pretty ugly. Still pretty ugly. Pretty ugly. Does anyone have vacation coming up? Is anyone like traveling soon? Is anyone going to like, I don't know, Hawaii or something? Your future's still red. Bitcoin, is it selling off again? Literally Mexico tonight. Wow. I have not been on vacation for a while. Yeah, Bitcoin right there, 87.1. You know, I was talking to Steve last night, and I think I kind of previewed this conversation as well. But we were just talking about natural goals for 2026, and one of my goals, quite frankly, I think I said this a couple of weeks ago. One of my goals next year is just to have some fun. Like, it has been 5 years of just non-stop grinding. I can't believe I used that word, but you know what I mean? Like working to subliminal, but working to freaking make this thing happen, make this brand, you know, become a thing and make the right investments and all this shit. And it's like, it hasn't been much of a social life. And it reminds me of this quote right here by Karp. And one of my goals next year is to, you know, have a bit more fun. And so like from a portfolio perspective, I'm also thinking, how can I construct the portfolio to the point where you don't have days like this, where things are just so aggressive, where it kind of messes up your mental health by, you know, maybe being in shit that's a bit more safer. Not saying to get rid of your core positions, at least for me, NVIDIA, Palantir, Hood, those are just like core things I want to have, but increasing the additional risk factor is hard because when you have a day like this, it's hard to have fun. It's hard to just like go on with your life.
Teenagers, young people around the skills they need to develop, the things they need to acquire to be successful in this crazy environment that we live in?
Find the thing you're uniquely good at. And then actually, I think, and then make sure your whole life is organized around allowing you to do it. And so I manage essentially young people and for the last 20 years. And I would say failure one is not willing to accept what they're actually good at. It may not be what you want to be good at. Not organizing your life around that ability. I tell the people who come to Palantir, I've never met someone really successful who had a great social life at 20. If that's what you want, that's great, but you're not going to be successful, and don't blame anyone else. So,
dude, he's so right about that. He's so right. Everyone has a different definition of success. And if you want to get married at 21 and have kids and that type of family life is your definition of success, then that's a definition of success. But if your definition of success is like, you want to build a brand, you want to start a business, you want to you want to have an audience, you want to grow, you want to like make connections, you want to network, you want to start investing and getting opportunities, like that shit requires just an intense level of focus. And quite frankly, you got to give up some of the social life. And so me, over the past 5 years, that's been the journey. And so I think the reason of even bringing this up is because, like, for everyone kind of navigating what 2026 is like, as Chris said, if you're older, how do you navigate the portfolio? If you're younger, but you might not want to go super risk on in a year where you want to have some more fun, because if you go that risk on, then, if we go risk off, then the portfolio drawdowns mean that you might not be able to focus on just living the more normal parts of your life because, you're so worried about a drawdown. Or are you able to manage both? Are you able to just like go super risk on and keep building and still have a social life? Like, these are all things that I think a drawdown like today or over the past couple of weeks gets everyone to start thinking about. Because now, there's a couple months left of the year, less than 2 months, you start really trying to figure out what is the next few years going to look like. Definitely 2026. And for all of us, like, the other reason this is important, because all of us at the end of the day are like happier when the markets are up and sadder when the markets are down. It's just, no matter how much you try to hedge against it. Like, yesterday was really happy, today is really sad. And you either you either align yourself, and it's the same thing with you if you're like just starting a business, right? Like, you're really happy if you're grinding and growing your business and you see the growth, or you're really sad if you're not getting the progress. So the question then becomes, how emotionally attached are you to it? And it's very emotional for all of us that have to go through a massive drawdown after seeing so much of the gains and trying to still navigate the other parts of our life. I always hedge my happiness with chocolate cake. I just think these are internal conversations that everyone needs to have with ourselves. And, I've been having those conversations too, and just trying to think a bit more. But then again, like, the nuance of the conversation is that you also don't want to put your foot off the pedal, right? You want to keep grinding. You want to keep working. It's like, I think I talked about this a year ago, but like, one of the reasons why my Twitter account has grown is because, like, I'm just obsessed with the news constantly. And on Twitter, you grow by being first to breaking news, or to being first to having the best analysis of the news. And the markets, it's like, there is not a dull day in the markets. But to have that type of growth, you have to be so entrenched in what's happening, which means you've got to lock in constantly. There really can't be a moment where you're not on your phone paying attention to it. I don't beat Evan on the news. Evan always beats me on the news. But, I communicate the news in my own way. Like, I'm not literally just like, here's the news, here's what happened. There are some accounts that do that really well. I'm more of like picking and choosing the best stuff in the market and then curating it. But it's work, and it's like, it requires an incredible level of mental strength inside of that ecosystem to be doing that. Content creation is like, it's hyper competitive. So I think all of us have to think more deeply about kind of how we want to navigate next year while also dealing with the portfolio. Yeah, you can't miss a day. Are we actually up a little bit after hours? Again, it's a very little bounce, dude. Very low volume. Robinhood was at like 103, now it's at 105. So it's a very slight bounce, but we're going to have to see over the coming weeks how this continues to play out. Can we get our 2,000 straight into our brokerages? Oh my gosh. Dude, I'm not getting that 2,000. I'm sorry. I don't qualify for that $2,000. I just, like, 4 years ago, yeah. Now there's no way in hell I'm getting that 2,000. So I think that's another thing. As you get older and you make a little bit more money, $2,000 is not the most exciting thing. And then you start realizing, well, to print freaking 300 billion for this 2,000 maybe is not worth it. But then again, someone who's like really struggling, that 2,000 is everything to them. You're going to tell that person you're stupid for wanting 2,000, or you don't understand the monetary impacts of inflation. It's like, no, dude, that person's gonna be like, fuck you. I need my 2,000. I need to pay rent. So it's a dangerous game when Trump says we're just going to give out the money, because I don't even know if he has the power to give it out. But I think a lot of us here are not getting that damn money. But we would have to deal with the inflation if that happens. If that 2,000 check came in the market moons, make your money and run for the hills. That is a good point, dude. If Trump legit somehow goes full on, we're printing stimmies, rates are coming down, we will create a bubble. At that point, let's be very honest about this. If we print stimmies and we lower rates to 2%, we are going to create a bubble. It's just that simple. You cannot have that level of quantitative easing without some type of bubble. That's when we all have to start seriously thinking of how to take profits, because at that point, it's going to collapse. Now, can Trump manufacture a way to quantitatively ease without having it turn into a bubble? I don't know. Historically, when you engage in heavy levels of quantitative easing, inevitably a bubble forms. But we're not there yet. I don't we haven't quantitatively eased at all to that point. And, companies are still producing incredible levels of earnings, and the expectations and the multiples on those companies are not euphoric. So I don't think we're at that point yet. Bitcoin right there, 87, Ethereum 2859, BTC 87.15. What do people say? Do people say red or green tomorrow? I don't even check. What do we got? Red. 60% say red. All right, so I guess more red. We will be fine by year of end. We don't have to go to all-time high, but we're going to be better than right now, right? Krishna, I hope, dude. I hope. The reason I say I hope is because the market still has some hope the Fed's going to cut. Granted, I think we're priced for the Fed not cutting, so hopefully this is the lows. And the NVIDIA earnings highlighted that the AI trade is very real. So I would imagine even if the Fed doesn't cut, do we have to go back to 6,200? It's I don't think so. So I would hope that by the end of the year, we're okay. Again, fundamentally, nothing has changed in this market from over the past couple of months. It's just and if something has changed, let me know. Outside of the labor market and interest rates, which are some macro concerns, but in terms of the core premise of this bull market, the reason why most of Wall Street, every analyst, S&P targets are where they are is because people believe in the health of this market, while acknowledging some cracks, but not dismissing that the markets don't deserve the premium that they're getting. So I think by end of year, we should be better. But, we just don't know how this market's going to think of it going into December and the end of the year. I do think, though, if we get some stupid prices, these things, again, if NVIDIA wants to go to 160, if HOOD really wants to go to 90, these things get a lot more attractive. We're down because of the Epstein files. Look, maybe the Epstein files are having some impact. I don't think that's the case. Maybe I'm wrong. The Epstein files are definitely going to expose a lot of stuff. And obviously it's, I don't know if Trump's implicated, how he's going to deal with that, or if his name is redacted, or if he's not in the file. I don't know. Maybe there's other high-level Democrats. All that shit is out there, but I don't know if that's enough to cause the reversal we have today. The market worried about the Epstein stuff. Worst comes to worst, you're going to have people like Larry Summers, leave their public-facing opportunities because he's so embarrassed. It's all right, you might see a lot more of that shit happen, but I don't know if that really affects NVIDIA. Trump unveils a sweeping plan to open over 1 billion of acres off California, Florida, and Alaska for offshore oil drilling, setting up a major fight with environmental groups and coastal leaders. Okay, so the logic here is what? He wants to get oil prices down? Is that the idea? We saw rumors like this last week. I don't know if that's the biggest battle the market's going to care about, but maybe oil prices is something that Trump thinks could help decrease inflation prices, or decrease the rate of inflation. The Ukraine stuff also, that was big news this morning. They haven't fully, there were some rumors that Ukraine's going to have to give up certain parts that they don't want to give up, but there's also rumors that Zelensky's, getting closer to just agreeing to it to end the war. At this point, it's going to be a 3-year war. So that coming to an end also would be not the worst thing for the markets. Is the Japan thing fixable? I don't understand any of that. I am still doing my research on it. Just think of it as yen carry trade. Their yields are going higher. People are selling off Japanese bonds. The reason they're selling their bonds is because they are afraid that inflation is going higher because Japan is printing. People are short the bond in the United States, including many hedge funds. They're buying tech stocks with cheap money. The bond, they're short the yen. The yen goes up because bond yields go up. They have to sell tech stocks to cover their short. I mean, it's kind of the same stuff that we talked about a year and a half ago. But is that enough to cause the type of downside that we're seeing? I don't know. Yeah, it's creating a hefty level of margin calls as well. All right, guys, I think that's it. I mean, there's not really much else here today. Hopefully with Chris on, he was a little bit consoling. One of the worst reversals we've seen in a year, 3.5%, not just down or up, but up then down. And so that's why it was really so gut-wrenching seeing it completely reverse. And then there was no bottom. The bottom fell out. I mean, these names violated every moving average that they have. So unfortunately, it was one of those days that we just got to live through. Trump is not live. Trump is not. I thought he might be going live today, but this was the day he did not go live. He will be with Mamdani tomorrow. Dude, people were saying it's not going to be streamed. Carolyn Levitt was saying that it might be streamed. She didn't confirm, but I was listening to a little bit of the White House press secretary talk today, and she was saying you guys might see them tomorrow. So he'll be in the Oval Office. Maybe they're live, and then we're going to see how that plays out. Steve's going live in a little bit, so I'll link his channel right here. I'm also going to be live with Steve at 9:30. So I'll continue to talk with Steve. We might have some other guests join us, but there is Steve's channel. I think he'll be live in like 20 minutes. And then I'll be live with him at 9:30. The stock draft, people are asking for it. Somehow, folks, we are still number one in the stock draft. The high beta names are still outperforming. I'm up 17%. Steve is not down 12%. It's just that Netflix thing is messing him up. But Steve, the majority of his names are red. So he's probably in that 1 to 5% range. Tanner's up 8%. Chris is up 1%. And then Matt's up 8.45. I am up 17 with Grab, Apple, Nebius, JP Morgan, AMD, Tesla, Hood, and Palantir. Which, this portfolio, my ETF is indicative of a lot of our portfolios. It's way more high beta than everybody else. And it's still up even with an absolute stinker with Duolingo. So if you have a portfolio that has one name that's horrible, like a Duolingo, and then you have any level of growth across the other names, you're still probably up year to date, or at least doing relatively decent. And that's this really is the beauty of why I drafted my portfolio the way I did. Like, it's still outperforming everybody because at the end of the day, as Chris was saying, the markets want growth. Like, you can only want a dividend you want real growth. And the companies that I have right here have grown really well over the past few quarters. And I'm pretty sure they will get back to their all-time highs over time. So I think if it's emblematic of a lot of our portfolios, we should still be doing well. But nonetheless, that portfolio was up like 45%. Now it's at 17. So obviously the drawdown is very ugly. All right, that's it for me. Thank you, everybody. Appreciate you all. I'll be live tomorrow morning on the Market Open. I'll be with Steve at 9:30. And we will keep navigating how to deal with the equity markets. Thank you, everybody. Appreciate it. I'll see you guys later tonight and then tomorrow on the Market Open. Bye, everybody. Have a good one.